Thank you all for attending here. Thank you all for attending this event. My name is Amal Sened. I'm an enterprise advisor at Tamkeen under the customer engagement unit. Honestly, I was keeping track with the registration board a couple of days ago, and I was surprised with the number. The number was increasing day by day. So, unfortunately, we had to stop the registration at some point because the venue capacity, of course. But however, we're very happy with the number of attendees. We're very happy with the number of even the registered people. It shows that it's a very interesting topic, maybe like a hot topic in the market, and everybody wants to know more about it. So just to explain, first of all, what is Tamkeen before, I just want to say why are we doing this workshop? Why did we come up with this topic? We recently did it a couple of months ago under the Global Entrepreneurship Week, and we found a huge demand for the blockchain. So there was like, just to build awareness, what is blockchain, how you can benefit from the blockchain maybe in the private sector. However, we noticed that there was a huge demand. That's why we came up again with the same speaker, Fawaz as well. Fawaz, Shakrallah. And just to let you know what is Tamkeen, basically. Tamkeen been in the market for almost more than a decade, almost 11 years. And all that we did in the private sector was to contribute in the financial support. So we supported a lot businesses throughout grants, throughout financials, corporate loans, training courses, wages support subsidies. And we noticed that people are, throughout our throughout our consultation forums, we noticed there was a huge demand in non-financial services, which is the advisory platform. That's why in Tamkeen we introduced the advisory platform recently, not recently, a year ago, or a year or so, where we had a number of services under it. And one of it was a mentorship program. So we did a mentorship program. We wanted to test the mentorship in the market. We wanted to test the mentality of people, how to accept mentoring. And alhamdulillah, successfully, it went very well. We celebrated as well the graduation last year with 15 relationships of mentors and mentees. That was under, again, the advisory services. Again, we have another program which is we have a lot of programs coming up as well, such as internship. Internship, basically, it's a marketplace online where we facilitate or maybe it's a matchmaking website for individuals and for businesses. So individuals and businesses can post their CVs. Businesses can post their vacancies, where we match make them in the website itself. And again, we have another program, which is an online toolkit, where we'll have a number of, let's say, how to build your CV for career and for businesses, how to build your business plan, how to conduct a feasibility study. So everything will be online for people to share it and as well benefit from. And basically, we want to do the toolkits, online toolkits, for people that they might miss one of our workshops, so they will have everything online for them available. And inshallah, soon we'll be introducing a number of other programs where, such as coaching, we might have coaching soon, inshallah. We'll have other programs where there's a sharing knowledge events and workshops. So basically, our goal today, and I was waiting for this goal personally when I joined Tamkeen 3 years ago, is to introduce a knowledge-sharing culture. Knowledge-sharing culture doesn't come from only Tamkeen. We will work as the facilitator, but it all depends on the private sector and what does it need. So we want to feed this professional network where we have a number of mentors, speakers, potential coaches, potential advisors, mentors as well, as I said, to really feed this professional network. And honestly, it's a very powerful tool to contribute in the national economy and to build the private sector overall. Even if you go benchmark a lot of companies. Sorry, excuse me. I'm sorry, I forgot my phone. So, anyways, you can see that the knowledge-sharing culture comes from people, and that's why we want to build it up and feed it in with the experts in the market. And again, of course, that's why we're here today, to build this awareness about blockchain and to learn from the experts in the market. And as well, it's a network event for everyone to explore opportunities and share their knowledge with each other. And given that Bahrain is becoming a very regional financial fintech hub, moving towards a lot of improvements and development in ICT sector, fintech industries as well. So that's why we brought a workshop with the leading experts in the market, where we'll have panelists. Allow me to introduce some of the panelists and the speakers, of course. So we'll have Fawaz Shakrallah. Fawaz, first of all, we just want to thank you for helping us to put this event together and to come up with the idea as well. Thank you so much. Fawaz is the head of IT for Bahrain Institute for Political Development. We will have as well Khalid Saad. I don't know if Khalid Saad is here. Oh, hello Khalid, sorry. So Khalid Saad as well, we'll have him from CEO of Fintech Bay. And congratulations Khalid for the new position. Allah yawafik inshallah. And we have Gamal Magdi as well from Microsoft. And Gamal, I personally worked with Gamal with the Imagine Cup, where we coached startups and businesses as well. And Hisham Khalifa, where's Hisham Khalifa? On the way? Okay, so Hisham Khalifa, which is CTO of Tabo, if I'm saying it right, tabo.com, a fintech startup in UK. So thank you all for participating with us for this event. Thank you all for volunteering your valuable time with us and sharing your expertise and your knowledge with the market. And myself, my name is Amal Sanad. I'll be here with my colleagues, Sabicha, if you can just raise your hand, Sabicha, Ahmed Janahi, and yeah, I can see more are coming, inshallah, soon. So we'll be here to have to answer any questions regarding the advisory service, regarding the mentorship program as well, and anything related to Tamkeen. And please, the most important part here, which is the surveys. I really need, if you can just fill out the surveys later on once the event is completed, because we want to listen to you and we want to engage more and we want to know exactly how can we improve our workshops, and maybe if you have any trendy topics that you want us to add it to the upcoming event, please do write it down in the feedback. And thank you so much.
Okay, thank you, Emma, for the great introduction. And I'm looking forward to present some valuable information here today for people that can gain some new knowledge about the brand new technology that's poised to change the way we do banking, the way we do healthcare services. I just want to say, how many people actually heard of blockchain or have an idea what it means? Raise your hands. Okay, perfect, majority, okay. So essentially what we're going to be talking about today, I'm just going to go over the agenda quickly. We're going to spend about 30 minutes talking about the introduction to the Bitcoin blockchain. And we're going to talk about the benefits of the Bitcoin blockchain and how it presents valuable information for different startups and financial services in healthcare. And I'm going to talk about the blockchain fundamentals, some of the security aspect of blockchain. The cryptography demo, we may not have enough time to do it. We may do it, keep it at the end. Then we're going to be talking about transparency and trust in blockchain and how it's valuable and the benefits of transparency and trust in the market and in the government sector for Bahrain and the region. Then we're going to be talking about Ethereum, where we're going to be spending about 30 minutes on Ethereum. We'll be also talking about the structure of Ethereum, smart contracts of Ethereum, which is a very, very powerful feature in Ethereum, which many of the ICOs are working, and I'm sure you heard a lot of it now. We will also be talking about ICOs, tokens, and Ether units on a brief general business cases. And then we're going to have 20 minutes of a demo of an application on an Ethereum, which will be presented by Mr. Hisham Khalifa. And finally, we're going to do the Q&A session for about 45 minutes where we can take some questions from the audience. Okay, I want to start off by this slide. I was having a discussion with some of my management team with this slide. The people who created apps that the whole world cannot live without today, right? So I want to ask the audience this. How many years experience did Mark Zuckerberg have when he started Facebook? Zero. Any experience in media? Zero. Any experience in news, telecommunication? Any experience in journalism? All right, so the point here is this simple. The CEO of the world's largest social media company was a computer programmer, right? The same thing for Instagram founders. Normally people would say, okay, so someone who founded Instagram, maybe he worked in a camera company. Maybe he worked in Nikon or Sony, right? Sony was manufacturing cameras since the 80s. But none of these people, they had zero experience in the industry, zero experience in working in a specific company that related to the actual startup which they did. Same thing with Snapchat, same thing with WhatsApp. So we're basically living in a world right now where people who come from computer programming or technology background are disrupting major industries using their technological background. They're basically merging or leveraging technology solutions and combining them with a product or a service that's allowing them to create a value proposition for the mass market, right? Again, zero experience in the field, right? So based on this proven reality that we live in today, the next wave of fintech startups or the fintech giants, most likely it's going to come up with what? People who have experience in technology or in programming. Based on this reality, the people who will come up with new fintech solutions most likely will not come up with someone who has 15 years experience in banking or 20 years experience as an accountant. Most likely that's the case. And these are only a tip of the iceberg. The same thing with Netflix, the same thing with even other startups, right? This is what's happening in the market as we go forward. And blockchain is a tool, a technology, a profound technology that allows you to do more with less. Less time to program, less time to develop, less time to be able to build. And that's why it presents an amazing opportunity for people to create and deploy apps in the startup world and in the government sector. We're going to see how blockchain allows you to use transparency, security, and trust to be able to build that into your startup idea. Or if you are an existing fintech or financial services company, you'll be able to use that and leverage that technology into your startup. Okay, my background. Basically, I've been in the IT for the past 17 years. Currently, I'm head of IT at BIPD. Before that, I was at BMC Software, where I was based in Riyadh, Saudi Arabia for about 4 years. And before that, I was in Zain, Bahrain, also as an IT project manager. The picture here is actually, I pitched for a startup competition last year in December. And I wasn't actually going to go. My friend invited me over. And I pitched an idea, and I was able to luckily, we won second place for a venture startup. The point is, if you have an idea for a startup, I highly encourage anyone to try it out. Even if you don't have an idea, but you want to get your, if you have like let's say a semi-idea, you have some thoughts about it, you'll get to know some or meet some people that you can connect with, and you'll be able to share those thoughts with. You can probably join someone who has a similar idea. It will get you to get your, basically your ideas moving in the flow of what your interest and your field is. Education, okay, so my knowledge from blockchain basically came from lots and lots of research. The first book by Eric Alton is actually great if you're a business owner, if you are a director, you would just want to know what's the high-level information about what blockchain is, how it can be beneficial for you. The first book is is great for that. The second one by Melanie Swan is a bit more technical, so if you have a technical background, I highly encourage you to read that book. It has a lot of use cases about blockchain and the technical implementations of blockchain. The last book by William McGuire, it's a very detail-oriented about the structure of blockchain, and it also has a lots of implementation, the security aspect of blockchain. Overall, they're all very good just to learn about the technology, but the first one is probably more for business-oriented people who want to have an idea about the benefits of blockchain. In September last year, I attended this forum, blockchain forum in Dubai, and I was very, very impressed with what Dubai is doing in the government sector with blockchain. And we're going to see some of those use cases now. Today, Dubai government are testing use cases and POCs, proof of concept, for blockchain in the health sector, Ministry of Health, They're doing testing in the banking sector, NBD, Emirates NBD, and they're also testing blockchain in the Dubai Land Department and their Ministry of Housing. All of which they discuss those cases, and they're trying to benefit as much as they can, again, using transparency, security, and trust. The main aim of all these projects to be able to build more trust with the people. Blockchain allows you to do that, transparency and security and trust. And we're going to see how that is in the next slides. Okay, this is one of the most, I think, amazing things that Dubai government is doing, that they want to have every single government document on the blockchain. Why is that? One of the main reasons, because in blockchain technology, you cannot change and modify your records. Once a transaction is on the chain, you cannot change it, you can't delete it, you can't tamper with the data. And that's one of the reasons why the Smart Dubai government discovered that this is one of the key tools for them to be able to implement their initiatives using blockchain as a technology and not any other blockchain. One of the most important points is this, right? The success, the popularity of blockchain is the result of the success of Bitcoin. The fact that Bitcoin trading works, regardless of the price of Bitcoin, right? Bitcoin's been trading since 2009. The fact that it's been working and trading successfully, that proves the technology is working securely and effectively for the past 8 years now. The cryptocurrencies, every cryptocurrency has its own blockchain network. And the fact that all the trading of different cryptocurrencies like Ethereum and Monero, they all work, that proves the fact that the blockchain is resilient and robust when going forward into millions of transactions around the world. Okay, so the basics, the fundamentals of blockchain, what exactly is it? Can someone just share with me what they think blockchain is? Anyone? What's their general idea about what is blockchain?
Distributed ledger.
Distributed ledger, okay, perfect.
Blockchain is a shared distributed ledger, like a peer-to-peer transaction. You can do peer-to-peer transaction, and if simply, like a database, okay, where you can just show your transaction, you could distribute, and if there is any party involved in that, they will just verify your transaction in regard of that.
Okay, perfect. That's exactly true. So to make it more simpler, imagine one big massive Excel sheet with different transactions on it, sending units of value, currency, in the case of Bitcoin, one Bitcoin from one wallet address to another, from one person to another. That's essentially what blockchain is. And once the transaction is on the blockchain registered, you can't change it, you can't modify, you can't delete it, you can't change the number or the date of it. That's the beauty part. What that means is, it means there's no data manipulation, no tampering in data. Imagine companies who publish who are public companies, they have to publish their financial records, and sometimes what happens is they try to inflate the numbers at the end of the year to make sure they meet the investor demand. Once transactions on the chain, they can't do that anymore. That's one of the key reasons as why blockchain is more secure than what we have currently as a centralized traditional model for applications, okay? So the second point is transactions. Every transaction has a date and timestamp and an address. Basically, an address of transaction meaning the following. You're sending money from one person to another on the blockchain. So a transaction has a date and timestamp of that time and date when you send Bitcoin from me to Abdullah or anybody else. At the same time, it has an address, a publicly listed address, my address to somebody else's address. Blocks. Every block has about 6 or 7 transactions registered on it. And then every block is connected to the next block logically. All right? So what this means is that every transaction that you make gets registered in a block, and once a block is issued, you cannot change it or modify it or delete it. And it's there forever, recorded history. We're going to see a more clear example how that makes sense. If you can imagine a train, like a cargo train, all right? Every cargo train has a bunch of cargo boxes connected to it in a chain, linked to each other. The train moves and stops at every station every 10 minutes. At every single 10 minutes, when it stops, a new block is added to the back of the train with a new cargo box. And again, the train keeps moving. So every cargo box on it represents a block on the chain, right? With every cargo box has like a little PC with different transactions registered on it. That's one of the simplest way for you to be able to understand or have a reference point of what it means in the blockchain. Any questions? Okay, how does that present advantages in the blockchain, right? So, first of all, the reason why was this created in the beginning by Satoshi Nakamoto, who is an unknown entity. The reason this was done is the following. In 2008, the financial crisis, until today, not a single Wall Street banker or executive or CEO was convicted of a crime due to the financial crisis, until today, right? The crisis that created the financial crisis of the whole world, that wiped off billions off the markets, put a lot of Americans out in foreclosure homes, wiped off their savings and retirement funds. Until today, not a single Wall Street banker was convicted. So when this happened in 2008, Satoshi said, I can't trust the banks, right? I can't, if I put my money in the bank, here's what's gonna happen. They're gonna take that money out, and then they won't be convicted, which means that the system is protecting the elite few of the banks. That's where the conclusion was. That's why the reasoning happened, to create a system where I can send money, skipping all the banks without the cost, without relying on the central bank. That's where the whole motivation came from, right? It was a frustration with the system, right? So to make matters worse, the US government passed a $700 billion package to bail out the banks that failed due to the errors created by the Wall Street banks, right? What does that mean? That proves one thing. The system in the US protects the elite few bankers, which is why Satoshi said, I cannot rely on the banks anymore. That's the main motivation behind it. So the system was created to be able to send money to any person in the world, skipping all the banks, skipping all the charges that each bank charges you. When I go to BFC today, and I want to send money to Canada, the BFC charges me the exchange rate between Bahrain dinars and the Canadian dollar. They take an exchange rate of that. They take a commission on the transaction when I send it. The bank issuing, it's called the merchant bank in Canada, takes a chunk of the transaction. The receiving bank in Canada takes a commission rate of that transaction as well. So imagine how many times a user is being charged. That's 4 times on a transaction that I'm sending from Bahrain to Canada. That's the same thing for sending any money to Philippines or any other country in the world. And there are different rates for every single country. And that's why it's not cost efficient. One of the main reasons in blockchain is that you can send that money completely skipping all the banks, and you can save all that money from the user perspective. Okay, so how does it work? Blockchain as a technology, it's a push-based technology. What that means is the following. I have to initiate the transaction. I send money to you. I send money to Abdullah. I send money to Muhammad or anybody in the world. Right? It's not a pull-based. When you run a credit card, there's a central database by MasterCard or Visa with your name on it, with your ID, and it basically pulls data from that credit card to initiate your transaction. With blockchain, it's different. You initiate the transaction, right? You're in control of the funds. Why is this important? Because every central database is always going to be a target for hacks, right? If you think about it this way, Visa, MasterCard has hundreds of millions of accounts registered by people and owners and corporates. The bigger the account, the more attractive for hackers to try to attack and hack those systems. So the bigger the central authority, the bigger the bank, it's always going to be an attractive target for people or hackers to attack it, right? In the case of blockchain, it's distributed. And we'll talk more about that in the next slide. So as I said, user identity is not registered on the chain. If you want to do a transaction on the blockchain, there's no link between your name or your mobile number or your email address or your passport to the address that you have on the blockchain. None of that. People, all you have is a wallet address, which is about 58 characters, like alphanumeric characters, which is registered on the blockchain. You can access it, you can get the funds out, you can transfer the funds to somebody else if you want to, right? But there's no way anybody can go and link that account to you, because there's no link, there's no logical link between that. So anybody who wants to be able to see that address, they can see it, but they don't know it belongs to you. Why is that important? Why is that a security? Because the following. When a bank announces he has signed up new corporate accounts, right? What does that mean? That means they sign up big, large corporate accounts, private individuals, high net worth individuals. That means most likely those high net worth individuals have credit cards in that bank. What does that mean for hackers? It becomes an attractive target for hackers to be able to go and say, okay, guys, guess what? This bank just signed up some new corporate accounts. We have to go and try to hack them because now they have large accounts. In this case, in the blockchain, it's completely flipped to avoid that target of attacks. That's the main reason why it's created this way, to remove your identity from any account, to be able to make it more secure. Advantages: lower cost to send value globally. There's no merchant account in any country. There's security using cryptography and hashing. All transactions are verified on the blockchain when they're registered, and they cannot be changed or modified or deleted. No authority can change or modify anything on the blockchain once it's registered, right? The authority, the central authority of the power is distributed across the miners or the community of the blockchain. Here's one main example. If you give unlimited power to a CEO or a CIO or a central authority, chances are they might be corrupt, or they might condone or do some corrupt activities, right? Chances are. It's maybe likely, right? It's human nature. I mean, if you look at your kids, they do something bad, and if you don't punish them, they're going to do it again and again and again, right? So when you have central authority, they do whatever they want, and they won't be penalized for it, they're going to do it again. Now, when you take that power of authority and you distribute that power of authority up to 10,000 people, it's less likely that 10,000 people are going to be corrupt, or they're going to condone or support corruption or fraud activities. And that's where the power comes in as an advantage point for blockchain. That's why we're saying security, transparency, and trust, right? Okay, security, transparency, and trust. So why is it secure? Because the authority is distributed to the miners community. The people who confirm and verify the blockchain transactions are essentially distributed all over the world. I think there are about 60,000 users right now who are mining and confirm the transactions, which means that if, let's say, someone wanted to hack or change a transaction on the blockchain, what should happen? 51% of all miners in the community must be able to agree that this transaction is false and needs to be changed, which is about maybe 35,000, 40,000 users. They all have to agree that this transaction must be changed. What does that mean? Here's what this means. If I make a transaction today, sending 10 Bitcoin to my friend Abdullah, and then after a month or 2 weeks, I say, no, this transaction is wrong, I want to be able to modify it. I have to go and convince 51% of the miners to agree and consent. Sorry? People across the world, spread out. Nodes. Anybody can be a miner. That's the best point. You can be a miner if you choose to. You can get your PC, you can get your connection, you can connect to the network and be a miner and mine the transactions. Anybody can be a miner. It's open to the public. There's no cost or anything, right? Because the miners, what happens is they get rewarded by Bitcoin when they do the transactions. And there's a reward for every miner who actually does the mining and verification of the transactions. That's why it's becoming an incentive for people to mine and verify the transactions. Sorry?
It's a funny question, but what happened if it's switched off?
The network, yeah. If all miners switch off,
What happened to
the money, it's going to be held in those accounts. It'll be locked in a way. It's like basically every single user has a copy of the blockchain. If every single user turns off his node of the blockchain, that's maybe 60,000 users, then the network would be off, completely offline. The wallet's account and those addresses would be locked in the network. Yes, that's what happens. Is that likely to happen? Most likely not, because that would mean like as if you want to turn off the internet, which is almost impossible, right? That's the same level of comparison between the two. So cryptography, private key, public key. Okay, this is very important about the wallet addresses. Whenever you create a wallet address on the blockchain to send money, you're creating basically a 56-character hash address of that wallet. And you get an equal private key for you to be able to access those the money in that wallet. What does that mean? This is very similar to having a physical mailbox, right? You have a physical mailbox, you give that number to anybody in the world to send you content. But only you have the key to access that mailbox, to open it and get that content out. So the key is like the private key. If you lose your private key, you lose access to your wallet address. You can't access those funds. If your private key is stolen, that other person will be able to access and get your funds. Just the same way as if you lose your physical mailbox key. Someone steals it, he'll empty out your content, and you won't be able to do anything about it. And this is one of the main key points about blockchain. The private key must be held securely within your, basically in a secure location for you to be able to access that content in your wallet. The network is distributed, resilient. What does that mean? If anybody here used BitTorrent to download content, when one of the seeders drops their connection, it does not affect your download. Your download still continues because the distribution of that file is across many different users, right? It's completely distributed, peer-to-peer. So it does not affect your service. You're still getting your service. The same thing with blockchain. If one node goes off, there's multiple other nodes. Why is this important? This is important because currently right now, whenever you make an application, you do a client-server application, you have a database, you have a server, you have an expensive firewall that you have to put up there to secure the database, to avoid hackers. You have to purchase secure socket layer licenses. You have to secure the database with different software algorithms or any other security appliance. All that cost that you have to incur is gone when you make your application on a blockchain. Why is that? Because the security of the blockchain is maintained by the network itself, right? We're going to see how that is later on. Transparency, this is a key point. Every single transaction can be viewed on the chain. Whenever I send Bitcoin to somebody else, it can be viewed by somebody else, right? But there's no link to me, right? So that means it's transparent. There's no colluding and whatnot. Wallet address is not linked to any ID, as we said earlier. Trust, more trustworthy than the current system due to distribution of power. Transactions, once written, cannot be deleted or modified, and they're permanently recorded in the history of the blockchain. So this is why we say security, transparency, and trust. And that's one of the main reasons why the governments, especially in Dubai, are shifting their focus to blockchain-based technology for their applications. Okay. Before we get into Ethereum, are there any questions about what we just talked about?
I had a question, the SegWit UX implementation in Bitcoin.
Yeah.
If you're aware of it, I read somewhere that it mentioned transactions would be reversible. What does that mean?
Yeah. The SegWit is basically a hard fork for people who maybe heard or did not hear about it. Essentially, I read that they did not approve it, so it was not applied to the chain. It was held because of the community of core developer did not agree to it. If I didn't read a transaction would be reversible, but if that is the case, it means you can reverse a transaction. That would be against the rules of blockchain completely, if that's the case. But from what I remember, they did not apply that SegWit.
Can this be applicable in, say, political activities or activities?
Yes.
Or education or health?
Yes. We're going to see that in the next slide. I'm going to talk about specific use cases about that. Yeah. Any other questions about blockchain? Yes.
Yesterday it was announced there was a crash in Bitcoins in the market. So what's the drawback of Bitcoins when it comes to blockchain? When it comes to financial, of course, I think there is no correlation, as you say, it's transparent. And maybe when it comes for political or whatever, there is traffic or especially for insurance. But maybe there is drawback, there is mistaking. It's difficult to, you cannot read the information.
Yes.
So how you can go over it? There is correction of the information. Let's say someone who was in jail for whatever reason, and then claim that he was innocent. So it's difficult to delete that part of thing that he was not.
Yeah, he was convicted maybe.
He was not convicted. This
Okay.
is one. And what is the drawback of the Bitcoins? Because just yesterday it was announced the crash of the Bitcoin in the market.
Okay. So just to repeat the question. One question was about the crash of Bitcoin in the market. I'm not sure if that was a crash. You were talking about the CoinCheck, which is a Japanese exchange that was hacked for a coin called NEM, or NEM.
Yes.
NEM, right? And the second question was about if, like the use case that you mentioned, that somebody gets convicted and you want to reverse that.
Or even for insurance, someone was diagnosed for certain diseases, and then after checking, they could discover that
He doesn't have that. Okay.
he's not that disease.
Okay. What that points to is this.
For health checkup, for example, for employment or for whatever
Reason.
they would use.
That's the thing. When you do a transaction on the blockchain, you have to be 100% sure that that's correct. Because if you do the transaction and you can't change it, what will happen in the system, you will append to it. If someone who is diagnosed with a specific disease and they put that transaction on the blockchain, right? And then they go and they say, no, he no longer has that specific disease or he's not diagnosed, it will add a new transaction under that. So they have to look at the most recent transaction. You will still see it as a history because it keeps the history of all the records in the chain. Right? But you can't modify previous transaction. That's a risk in itself, but because you can't modify the transaction, that's the main. Just to answer your second question about the Japan hack. The hack about the coin check, this happened many times before. There was a famous hack, Mt. Gox, which happened back in 2013. Here's the clear distinction. The blockchain was not hacked. What was hacked was the exchange network itself. When I go into an exchange and I want to be able to buy Bitcoin, what happens? I transfer my money from my wallet address to the exchange wallet address, right? Then the exchange goes and makes the purchase of 10, 20 Bitcoins on my behalf. When they make that purchase of let's say 10 Bitcoins, that Bitcoins, the number of Bitcoins is assigned to the exchange wallet address, which is still under the exchange address, right? And their name. When I go and see the account, I have to go and transfer that amount from the exchange address into my account to be able to secure it, right? What happened with the coin check? The coin check used what is called a regular storage for their wallet addresses. They had over $500 million worth of coins, but they did not secure it properly. So hackers used this as an advantage, and they were able to empty out their wallet address. They found out the private key of the exchange address, wallet address, and they were able to empty out that account. That 500 million belongs to different individuals who did not go and assign those Bitcoins back to them or that coin back to them. And that's where the hack was. The same thing happened on many other attacks. There was one case called Mintpal, and another one called Mt. Gox. And there was also a case happened 3 months ago called Nice Hash. It's also a company that was also hacked. Their coins was hacked the same way. Because the exchange did not put the proper security measures to secure that wallet address, to secure the private keys, to be able to secure it and not being hacked. That's where the difference is. There are different ways of saving your private keys, and we're going to talk more about that later. But the most important thing is they have to be able to get secure. Sorry?
How to prevent from such things to happen? Perhaps that's why some central banks they have hesitant to use the bitcoins because of the compliance, I think.
Yes.
As trading is a good way and all the advantages, all categories, diaring and all of this. But I think the critical issue of the bitcoins for the central banks is the concern of the compliance.
Right.
It's very difficult to avoid the money because they have anti-money laundering, and that's why they have some concern about Bitcoin.
Right. I'll talk about the central bank's point.
This worries.
Yeah.
Because as you know, most of the government, especially the government of Bahrain, they are trying to convert or going with the trend with Fintech and blockchain.
Yes.
But still, with the central bank, they are hesitant about blockchain when it comes to Bitcoin.
Yeah.
Because of money laundering. So
okay. One distinction. Bitcoin is an application of the blockchain. It's not the only thing about blockchain. Bitcoin is only one single application. Cryptocurrency is a single type of application on the blockchain. With blockchain, you can have multiple applications which you can do with. Bitcoin and cryptocurrency is only one factor of it. It's not always. So the clear distinction is we're talking about blockchain as a technology that can do different applications with, not necessarily cryptocurrency trading. That's where the case is. And I'll talk more about the central bank case in the next coming slide. So, okay, Ethereum. How Ethereum started is the following. The history of Ethereum came up with a guy named Vitalik Buterin, and he started Ethereum back in 2013. Ethereum has its own blockchain, right? And you can actually trade with different Ether on the Ethereum network. Ethereum's main advantage called smart contracts and also called Solidity. Solidity is actually a programming language on the Ethereum that you can actually create business cases with. We'll talk more about that in the next coming slides. Okay? The Ethereum blockchain has what is called ICO tokens, has Solidity as a programming language, which is built on the Ethereum blockchain. It also has a smart contract feature. The Ethereum is also supported by the Ethereum Foundation, Ethereum Alliance, which has multiple national companies who are supporting this initiative going forward. The use cases, which is one of the most important part here. With smart contract, you can do the following. Let's say in real estate, right? In purchase of an apartment. We all know the stories that happened here in Bahrain. Back in 2007, 2006, when they built these massive real estate projects, the 2 green buildings in financial harbors that never came to life, that never materialized. They stayed under construction forever. What happened in this case? People went to purchase the apartment. They put down payments for the flats, right? What happened? Nothing happened. The building was never ready. The financial crisis happened. The developer went bankrupt or had problems with financial credit, and they never materialized. The people who actually put down the 10% lost their money. They never got their money back. What happened? They went to the government, they went and complained, but they did not get anything until today. The same things today. The same projects happened for Amwaj Gateway, the same project, the same issue happened with Marina West, same thing exactly. People who actually, I was one of those people actually, but not in those projects. I purchased an apartment in Jafar, and it was delayed by nine months for delivery. And I suffered, and I couldn't do anything. And I work in the government, and I know how to go around it, right? Sorry? Sorry? Exactly. So when I went to complain, I realized that nobody can do anything for me. Sorry, we can't do anything for you. You know, we have to wait until the developer gets the building ready. When you make a purchase of an apartment, you're governed by the developer. You cannot do anything about it, right? And here's where the risk is. When you buy a flat or apartment or a house that's under construction or off plan, you're still buying at risk. So how can blockchain resolve this issue? There's a company called PaySafe. If you go and purchase a flat in Amwaj or any other building, you go and you put down your 10% payment, your 5,000 BD. The company PaySafe takes that money and puts it in smart contract on Ethereum blockchain. That money is locked into the contract, right? It's safe. And you can set conditions. If the developer does not deliver the flat in 2 years, you get your money back. If the developer delays and is unable to even pay or deliver, let's say, whatever problems he faced, the building was delayed by 1 year or 2 years, you get your money back. The developer cannot access those funds, right? If you make your payment now, you make it 6 months later, you make the second payment and so on. So your money is safe and secure and it comes back to you, right? This is what blockchain can do. This is why it's secure and efficient and transparent. It can protect the investor's money going forward. And this is only one part in a use case in real estate. One of the other, Dubai Land Department is actually testing blockchain right now for the following reason. They had a lot of cases where expats would come and purchase one flat and they would sell it to 5 different people. They take the money and leave, right? So imagine if you have an app and you look at the address of an apartment and you see that this is sold and there's a registered owner and the same address. So you have more confidence and you know what you're buying, you know who you're paying for. And that's where the reality comes in. That's where the power of blockchain is, because it gives you more trust for the people, right? Next use case. Let's say, okay, because of the time, I'll jump to the main case. Let's say I'm the CEO of a bank, right? I'm the CEO of a bank and the end of the year is December. And let's say we're in October and I look at the financial figures, the balance sheets and the income statements. And I look at the numbers and I say, we're not going to meet our target revenues for this year. So what do? I go to my head of finance. I tell him, look, we're not going to meet our target revenues for the year. Give me options on how we can change those numbers to make it look like we're going to meet our target revenues for the year. Because if we don't, we won't get paid our bonuses. What happens? The head of finance goes and chunks some numbers. He comes back, okay, we can actually change some fixed deposit numbers by approaching our top investors and say, you can put some fixed deposit temporarily for this quarter, and then we can return back to them in Q1 2019. And then it will look like we actually reached our fixed deposit revenues, our target revenues, and we still get paid our bonuses, right? This scenario is very common. And it was very common, especially in 2008, 2009. Now here's the key point. How can a blockchain solution resolve this case? Here's one option. The central bank can deploy a solution saying there's an app called PaySafe, which is on the blockchain. And the central bank can approach every retail bank and tell them, look, every month, at the end of every month, I want you guys to register your financial statements, your balance sheets on this application. Every month. So every month, every bank registers their financial statements on this application until the end of the year. When it comes to October, and they will see that there's suddenly a spike, an increase in that fixed deposits, which the bank had to inflate. So they will be caught, right? People will see it. It's going to be very clear. Why is there a spike on the last month of 25% in your fixed deposits at the end of the year? Show me some numbers. This calls for an investigation. The point is clear. You want to make it more difficult for people to be able to use or try. I mean, the reality is this, right? There's always going to be hackers. There's always going to be people who think they're above the law. There's always going to be people who think they're smart, they can outsmart the system. The key here is to make it more difficult for them to be able to hack or even to conduct or fraud activities, and to make it more riskier for them to be exposed, right? Blockchain allows you to do that through security, transparency, and trust. By putting transactions on the chain, you can expose those potential fraud cases if anybody tries to do this. It gives you a more secure way. There's no guarantee. There's no guarantee that you'll be able to catch every single case, but you're definitely going to have a stronger view going forward. Another case of smart contract is basically the will of a deceased. This is a very simple case for legal services. So let's say a father who wants to write a will for his son. He wants to give him 60,000 BD. But if he passes away, he doesn't want to give the 60,000 BD to his son immediately. He wants to give it to him in increments. When the son turns 18, he wants to give him 25,000 BD. When the son turns 25, he'll give him another 25,000. When the son turns 40, he'll give him another 10,000 to make it 60. This can happen with the Ethereum blockchain. You can have an application where the father can actually put and develop the smart contract. At every single event it triggers, you'll be able to assign the value of currency for that amount, and that person, the son, will be able to receive that money. If I'm the son, I can go to the lawyer and tell him, look, I'll go to the lawyer, look, give me all the cash now, and I'll give you 5%. You know, that's what can happen today. With the system and the smart contract, it can protect you and the client with further transparency and trust to be able to do these use cases. This is what's possible. One very famous use case is the following for car parts and manufacturing. If you want to buy car parts for Lexus or any other company, you want to make sure it's authentic and original. Imagine going to that car part, the seller. You can open the Lexus app on your mobile app store, and you can scan a QR code on that part. It will give you a full history, when that part was manufactured, what date. It will give you when and who manufactured it, at what location, and give you an approved and authenticity and authentic by Lexus that it was actually an original part. The same thing can be applied for luxury goods like handbags, like Rolex watches. The fake counterfeit market in the world, everybody knows as you go to China, you can buy all these fake different watches. Imagine being able to scan that QR code on that watch to confirm what you're buying is a real, authentic product. That specific aspect makes you feel more secure about buying something that's original, something that's real in value. You feel more trust when you make that purchase. Blockchain allows people to do that, and that's one of the reasons why it allows people to make more transactions. Questions? Yes?
Are these cases dominated in Ethereum?
In Ethereum, yes. In Ethereum, yes.
So it cannot solve an issue of authenticity,
Okay.
but create another issue of value preservation.
Yes.
Due to fluctuation of Ethereum.
Yes.
Under denominator of the case.
Yes, for the Ether coin, you mean? The fluctuation in the Ether coin. That's correct. That's a very good question.
So how we can solve all issues at the same time?
What the question is basically this. What he means is, if you do a smart contract, and let's say for the same case, when the father puts 50,000 BD worth of Ether coin into the smart contract, because Ethereum is publicly traded, the price of Ethereum fluctuates up and down. So how can you lock that amount to secure the value that you're putting into the Ethereum? Is that correct? Yeah. So,
Is it like hedging for the current time?
not hedging. No, not hedging. What happens is this. There are now services, online services, that allows you to lock that value when you make the transaction in the smart contract. If I go in and put a will for my future son, I can go for the price of Ethereum today. And there's a mechanism where I can lock that price of Ethereum at the date of the smart contract that starts. So when I go in now, I can say I want the value of my 60,000 BD to be matched to today's value of the Ether, the currency, so that I don't lose that investment in case the Ether coin decreases in value in 1 month or 2 months or 2 years in the future. There are servers that can do that, and the smart contract feature from Ethereum supports that function as well.
Who decides this?
Sorry.
Who is the decision maker in this? I mean, in our case, we have the central bank, the IMF, whatever.
Yeah.
I mean, what will be the elements that determine whether they go up or down?
Ethereum, okay. Ether is just like Bitcoin. It's publicly traded. It's based on supply and demand. You can't control the price of Ether unit or Bitcoin unit. It's based on the market supply and demand. The more demand is for a product, the more the price increases. Basic economics, right? So when you go in and do this use case and you say, I want to have this amount for my future son, I want to be able to secure that same fund. So in your program, basically the application, whoever the vendor is, in the application you can tell the application vendor, I want to lock the value of 60,000 BD for today's Ethereum unit. And they will program that for you into the smart contract system.
So it doesn't assume determined by the supply and demand.
Yeah, no, it's not. If you want, no, again, there's 2 points here. Ether is a free currency, right? Anybody can go and buy Ether, just like Bitcoin, just like Monero, just like NEM, or any other coin. Just like any other investment commodity, like diamond, or gold, or silver, or oil. You can trade in any commodity, right? Ether is a coin, is a currency of Ethereum. Ethereum blockchain is a network that allows you to do different applications on it using Ether.
But for any commodities, they have certain size or quantity.
Yes.
So, I mean, if this quantity increases, then that means the supply is up, so the demand is down. That's what controls the value of that particular commodity.
Yes.
So there is something against something.
Right.
In your case, there is nothing against nothing.
No, there isn't.
So this is very hypothetical. I mean, you decide that this is the value of my bitcoins against that currency.
No. You don't decide. The value of Bitcoin is decided by the market. Again, okay, let's talk about Ether. Ether is a currency determined by the market supply and demand, just like any other currency. When you buy US dollar, today it's up, tomorrow it's down. When you buy euro, today it's up, tomorrow it's down. When you buy any other currency, the same thing. It's determined by the market demand of the system.
No, but Shikarla, the demand and supply is controlled by either the central bank, and there is a quantity either in gold or diamond or whatever, or as the dollars against the US economy.
Okay.
So what is your reference in this case?
What you're saying is there are currencies which are backed by gold, correct? Yes, that's what you're saying. To maintain the value of that currency.
So if you go and you can cash your coins by gold.
Yes.
In that case, I cash it with what? Virtual?
No, there's nothing. There's no that's the thing about all cryptocurrencies. There's no backing commodity of Bitcoin. There's no gold behind Bitcoin. There's no gold that supports the value of Ether or any other cryptocurrency. It's purely supply and demand. There's a whole debate about this in the market today. And that's why the central bank are very skeptical about implementing or using Bitcoin as a currency. That's one of the main reasons for that. It's a big debate. And it's ongoing in China, in Japan, in the US, and in Canada as well.
I want to add in that question, like for example, he was saying that like central bank or any authority is behind that. So in cryptocurrency, there is a few authorities dependent on that, like a CME, Chicago Merchant Exchange.
Okay.
They have a contract with the cryptocurrency with the last, like they were saying they would predict the prices. Like might be the Bitcoin will stay on the range between 11,000 to the 15,000. So it's depend on the exchange as well. Like the big giant and all across the like Wall Street or a big stock exchange, they will predict the prices as well. So that's how the cryptocurrency prices will fluctuate in regard of that. Like CME, they had a contract with the cryptocurrency that might be the Bitcoin will stay on that limit. So it's depend. It's not like that. No one is behind that. The stock exchange, the stock market depend on that as well. They have a future contracts like a CBOE, CME. They have contracts with that.
Okay. I want to keep this point for the Q&A session, just because we're running out of time. So just keep your question for the Q&A. We will answer with the whole panel, please. Yes. Yeah.
Smart contracts can be modified. Say, for example, in your use case,
Yeah.
I set it for 25 years, 35 years,
Yeah.
40.
Yes.
After a few years, I want to change it. So alter that.
You can.
Contract.
If in the you can, because essentially a smart contract is a program application. If you put fail-safe to modify it, you can. But that's not recommended normally. You have to let it execute the whole contract until the end of the cycle of the contract. I just want to talk about ICOs because this is a very hot topic for everyone. Always are asking me about it. ICOs and what they mean. Did anybody? I guess everyone here knows what ICOs, right? Raise your hands if you know what ICOs are. You heard about them. You're curious about them. Okay. Very simple. Initial coin offering, right? An ICO is basically this: the following. It's that you're creating an application on the Ethereum network that creates products and services for you. Here's a very simple example. When you go to Dubai, you use the metro, right? What happens? You go to the metro and you exchange cash for the the ticket, the metro ticket, right? You give them 10, 20 dirhams, they give you that ticket. You use that ticket to use the train to go from station to station, right? So that gives you a service. The ticket represents the coin in that ICO. It's the same concept, right? The ticket only works in the Dubai metro. You can't use it outside of Dubai. You can't use it outside in Abu Dhabi, right? It only works there. So it's only usable in that metro. So what does that mean? The Dubai metro is like the distributed application. The Dubai is like the Ethereum network. For you to be able to use the Dubai metro, you have to be in Dubai. Same thing here. When you guys go to city center, you take your kids to play games. You go to Magic Island, same thing. You go and you get cash for that small card, and you put 10 BD, you get the cash, and you use it to use the kids' arcade games and everything else. It's the same concept. Essentially what happens is, an ICO is an application on the Ethereum blockchain. It's its own product and service. It allows you to conduct products and services using that coin, right? And when you use that coin, you'll be able to transact. Why this is becoming very popular? Because that's how Ethereum started in 2013. In 2013, when Vitalik Buterin started Ethereum, he wrote a white paper, and after 8 weeks, he received $19 million as funding to be able to do the Ethereum network as a system from VCs. And they flew him from Canada into Switzerland, and they told him, let's start the project here, and please go ahead. That's how Ethereum started, and that's one of the main reasons as to why this is happening and becoming very popular in the ICO market. If I start an ICO and I say, I'm going to launch a new application that allows you to be able to transfer money anywhere in the world for 500 fils for every transaction, right? It's very cheap and it's best in the market. You're going to come and use my services, and I tell you, I need $500,000 to do it. Most likely you'll be able to subscribe to it because it provides a value to you, especially for expats who use that service a lot to send money all around the world. That's why it is very attractive for people now jumping on ICOs as a market. Again, the business side of ICOs, it is essentially a bet. You're making a bet for a product or service that's going to do well in the market. It may or may not happen, right? It's a 50% chance bet. It may happen, it may not happen. In the case of an IPO, initial public offering, the company is existing. They have existing products and services. They have existing revenue. They have profits ongoing. So it's a very different comparison between the two. Okay? So I think we're running out of time. So we're going to do the demo with Hisham.
This reminds me of the colonial era where the European was exchanging beads with ivory.
If that's the case, then nobody would be using cryptocurrency trading anymore. So why is everybody jumping on cryptocurrencies and trading the value of it? I just want to show one last slide here. This is a project by Ethereum that was done in Dubai for a hackathon. And they won $100,000 last year for the Dubai government. And basically it was an Ethereum-based project where the group of people were able to actually use car parking on an Ethereum network to avoid hacks or fraud in people using fake tickets to claim like parking illegally on different parking zones. This project won $100,000 out of 10 other projects last year. And this year they're doing another project again for a hackathon for a blockchain-based project.
You'll have to excuse me. I was a bit under the weather for the past few days. So, right. So my name is Hisham Khalifa, and thank you. I'm CTO of Tabio, a fintech based in the United Kingdom. Previous to that, I was CTO and co-founder of PixelMe, another United Kingdom company that was involved in data mining technologies. So today I'm just going to give you a really quick overview about blockchain. I think Fawaz gave a good grounding to begin with. So to start off with, everybody knows Bitcoin, right? So Bitcoin is the most popular application that utilizes blockchain technology. But Bitcoin is not blockchain. It's just one way of utilizing blockchain technology. And blockchain technologies come in all sorts of flavors. So you've got the one that Bitcoin utilizes, you've got an Ethereum blockchain, you've got Quorum blockchain that's being developed by JP Morgan for the financial sector. You've got all sorts of ones coming out every day. And the applications go beyond cryptocurrencies. So you can use them for finance, manufacturing, logistics, healthcare, insurance, government, voting, etc., whatever. And the promise is that they would make things more efficient, more secure, and more transparent. So let's see how that pans out. And I think the best way to do that is with one of the most popular use cases that people utilize when explaining blockchain technology. So the first example that we're looking at is the supply chain example. Consider a food supply or healthcare product supply chain. Now, when you're looking at tracking down quality and safety issues in a supply chain, it can be costly and time intensive. And this is very critical in certain sectors, such as food and health. And tracing sources of issues requires contacting all the parties involved. So you have a lot of parties, a lot of participants in this logistical nightmare, if you will, that need to be coordinated for you to consume all the information coming from them and make sure that information is also correct and not being tampered with. So what could we do? Well, if this was 10 years ago, you'd think, yeah, we could set up a traditional database, maybe a web server, and have people connect to it and upload information. But is that really the best way? Is there a better way to do that? Well, let's take a look. So the three questions we have to ask ourselves: who will hold the data, right? Who will see the data? So there are participants in that logistical chain that may not want their secret sauce to be spilled out to everybody else involved, maybe to certain parties, but not to everybody. So how do we, basically meet those requirements? And who decides what data should go in? Who has the ultimate say? So they say that a blockchain is a solution because it requires certain criteria. The first criteria is that changes to the database or the ledger, if you will, or the distributed hash table, there's so many different names for blockchains, have to be approved by everyone. And it doesn't mean that humans have to go there and sign everything that goes into the blockchain. It's all automated. It all happens by consensus within all the different computers, IE nodes, that are maintaining that blockchain and have a copy of that blockchain. Second thing is you can build a blockchain with certain rules and restrictions. So you can create your own universe with certain gravity and physics and rules that everything must comply with. The third thing is that data that's into the blockchain may be digitally signed. So you have public key encryption, and parties can sign whatever data that they're going to put into the blockchain as well for further security. Then we have that data may be encrypted and only accessed with those with the access keys. So this goes back from the earlier point, so that if you want to give access to certain data to certain participants in the blockchain, you can do so as well. So it's really a flexible way of architecting data to access while also maintaining the integrity of that data. And then all the data in the blockchain, which is a really critical component of this technology, is fingerprinted. And you might say, oh, right, okay, so I can put something in the blockchain and I can change it maybe perhaps without anybody looking, and it's, I can get away with it, right? I've done that in organizations and I got away with it. Well, in a blockchain, they use a really interesting mathematical technique called hashing. And there are many ways of hashing things. And a hash basically is a mathematical formula that takes a given input of any length and provides you always something of a set length coded basically, a fingerprint, a digital signature. So for instance, that's my name there, Hisham, the way I spell it with an I. And under it, you can see something called the MD5 hash. So the MD5 hash for Hisham is this, and it will always be the same. However, if I change a single letter, if I misspell my name with an E, it completely changes because of that. And if you look at it, if you have the entirety of Wikipedia and you hash it, you're going to get a hash. And if somebody goes and changes a single character in Wikipedia, the hash is going to change completely, even if it's a single character. So it's a really, really useful algorithm, and there's so many of them being developed all the time. The NSA has been very kind to provide a lot of them public, so we can use them as well. And each participant maintains a copy of this ledger, and they all ensure that the rules are applied, the hashes and signatures also are verified independently by every participant in this network. So everybody who has a copy of it is able to make sure that, yep, those hashes add up. So I spoke about hashing, and I will keep speaking about hashing because I think it's really important to understand a little bit of the technical aspect of hashing in order to appreciate what a blockchain can offer. Now, it's called block, right? Where does the term block comes from? Well, when we're talking about blockchains and we're talking about reads and writes and doing actions on the blockchain, we usually refer to them as transactions. So these transactions are usually bundled together into groups. So for instance, we've got a block here, and we've got 3 transactions bundled together. And how do we do it? How do we kind of secure and authenticate the validity of this block? Well, the first step is that there was a previous block to that, and it has a hash. So that hash is unique to that block. There's no way in the world that that hash would clash with any other hash. The probability is completely, it's impossible, basically. So what you have is then you add the first transaction's hash, you add the second transaction's hash, and then you get the hash of the block. Now, if you are on a public blockchain and you want to provide some economic incentive and a level of difficulty for hashing, you can add another component to do that, to restrict the hash that you're getting, and that would give you the whole economic perspective of actually having a publicly mined blockchain. But if you have a private blockchain, you don't really need to do that. You can just do regular hashing. So let's go to dApps. With dApps, we have something called a decentralized application, or in some instances called a distributed application. So versus a traditional app, which you have the web server and you have the pages on the server and you use your web browser to just send commands to that server and retrieve information, a dApp, on the other hand, does not connect to a server per se, it connects to the blockchain network. And you might be wondering, how does that look? Is it any different? Well, it's not really any different from any other app, and I'm going to just show a really tiny demo I did on the way here. And what basically happens is that instead of connecting to a web server, it connects to the nodes of the blockchain. So the participant computers that are maintaining this blockchain, the miners, etc., that have a copy of this blockchain. And all the heavy lifting in terms of user access is done on the front end part in terms of the dApp. So the dApp just reads and writes from the blockchain, sees what's going on. And reading data from the blockchain, as a side note, is always in most instances cost-free, even on a public blockchain. However, writing data, changing the data in a blockchain usually incurs costs. So if you got something on the Ethereum blockchain, then you're subjected to forex risk because you're going to have to invest in Ether and in order to do your transactions. Also, a point to note is that all the data is visible to everyone in the blockchain. So as I said earlier, if you're going to put some data into the blockchain and you don't want anybody to see it, or maybe only a small group of participants, you need to encrypt it. So just like you're buying from Amazon, you use SSL encryption, you can use public key cryptography here to encrypt your data before you send off that payload to the blockchain. I'll do a quick demo now, and I hope the screen shifting works. So Right. So what do I have? Yeah. So this is basically, I just want to show you how kind of easy it is to set up, to get one of your IT guys to just have a play with blockchain technology and get a feel for it. One of the easiest way is to install something called Ganache, and it's basically an Ethereum development environment that is self-hosted. It's hosted on your computer. So my computer here is not connected to the internet, but I have a completely functional blockchain, Ethereum blockchain, with a environment where I can write a program, compile it, and deploy it. And I've done that already. And if we go to a web browser, I lost my mouse. Okay, here we go. Okay, yeah. Apologies for that. Okay, so for instance, this is a simple application, one of my favorite things. And assume that you want to verify the authenticity of luxury goods. You want to keep track of them. If you're the manufacturer, Rolex, you want to make sure that stock moving between dealers, which they do sometimes, is always authenticated, and that you actually have a complete overview over it. So this is a completely simple app, but it just shows you that it doesn't have to look any different than a web browser. So it functions in a web browser, but it doesn't connect to a server. It connects to the blockchain. And if you have thousands of dealers or participants in this blockchain, then all of these dealers are authenticating whatever changes are happening to this database by virtue of it being on the blockchain. So for instance, if I click on this, and I'm using a, okay, yeah. So basically, what happens is that it's asking me to confirm the transaction, right? So should I register this watch to my account on the blockchain? And if I click yes, then there you go. It registered the watch. And since this is a small dinky app that requires refreshing, you would see that I've actually registered my blockchain account to this watch. And it's gone through the same complicated process of hashing that I explained earlier. And there was a previous block that was hashed for this particular registration, and it builds on that. And so there is no way that you can tamper with it. And the more participants are in the network, the harder it gets, and it becomes mathematically futile in terms of energy and computational expense to do that. And so this was a brief demo, and I just want to, okay, keep losing my mouse, excuse me. There, okay. Right. So despite the promise of the blockchain, I think it's always good to have a healthy dose of skepticism, right? It's flavor of the month, and everybody is saying blockchain and distributed or decentralized applications are the future. But we have to look at it from the point of view of a balanced point of view. And I think in terms of how companies should go about doing a blockchain, there are a lot of technologies that are still nascent and will take some time to mature. For instance, efficient computational expense during and running a blockchain is moving away from proof of work, moving to proof of stake, which is a much more efficient way of computationally validating data on a blockchain. Then you have consortiums, right? There was this argument earlier on about Ethereum. You're subject to forex risk. What can you do? And I think one of the great ways that you can kind of solve that issue is to create consortiums of private blockchains, such as with Ripple or things like Quorum from JP Morgan. So with those things, you kind of like, in a way, mitigate the risk of any foreign exchange that would happen against the cryptocurrency that's running on the blockchain. In fact, you might as well do away with any currency when you're doing any computational computations on the blockchain. Then you've got sanctioned cryptocurrencies, sanctioned by governments. So just like fiat money, some governments would sanction certain cryptocurrencies. That's going to be a boon for business. You've got hybrid architectures from a technical point of view, so you don't really have to go 100% blockchain. You can have a hybrid architecture for your application, where you combine traditional aspects, such as traditional databases, with an underlying blockchain methodology in terms of validating the data. And then you've got stuff, novel application architectures that are being developed all the time. And I really can't talk about them because they haven't been out there yet, and they're still in the R&D labs. And the future is going to be very exciting. But that was just a really quick overview of the potential of blockchain. And I think it's an exciting area, but I think you have to take it also with a pinch of salt and kind of a balanced view, and always look at your existing organization. Look at a case study that you can use as a pilot project, but always ask yourself, why can't I do this with a regular database, a regular web server? Why do I need this? So when we were talking about the supply chain earlier, we've got so many participants across the world. So this kind of makes sense. Yes, we can use a blockchain, it'll be distributed, and all these participants in this food chain can't really tamper with it because of this blockchain. It makes sense. Certain business cases don't make much sense. I personally haven't seen a business case that flew off the ground that actually makes sense, and I go, yes, great, thank you for choosing blockchain. I usually say, like, you've just chosen it because it sounds great, but you could have done it with a traditional approach as well. So always weigh in and see what's best for you. That's all, basically. If you have any questions, let me know.
We have, I'm just going to introduce the panel again. We have the newly appointed CEO of Bahrain Fintech Bay, Mr. Khalid Saad. We also have Gamal Megdi. He's a cloud solutions architect from Microsoft. He's going to basically be able to tell us what offerings are there for from the blockchain side as infrastructure as a service, from Microsoft as options. And of course, we have Hisham Khalifa, who's going to be able to help us with answers about questions about the technical side of the advantages of using blockchain over traditional applications. So are there any questions currently from the audience? Yes, okay, can we get a mic, please?
Thank you, Mr. Speaker. The question is related to the previous one. Is there a way to use the blockchain with a newly created currency, a cryptocurrency that is pegged to a fiat currency? So you create a new currency, new cryptocurrency based on blockchain, where you peg it to US dollar, for example. So there is no fluctuation in value.
Well, there is actually a currency like this right now out there. It's called Tether, but it's a little bit controversial because people are saying that it's not really pegged and it's not really backed by the US dollar. But obviously, yes, you can. You can create a currency, a cryptocurrency that's backed by a real currency, by real assets. It's completely possible.
Okay, from my side, we just have actually a set of questions that we want to ask the panel. This came up as an option. And I just have one or two questions actually to Mr. Khalid Saad. I just want to talk about what are the overall developments that Bahrain Fintech ecosystem right now is happening in the system. Something that can be benefiting for anyone who has an idea for a fintech solution. I think that wake up everybody up, I think. Okay, so yeah, so what are the developments? Anybody who has like a fintech idea who want to be able to develop their idea into an actual business, and how Bahrain can be for that.
Fawaz, thanks for the opportunity. Ladies and gentlemen, nice meeting you. In case I haven't met you personally, Khalid Saad, going to be formally now the CEO of Bahrain Fintech Bay, which is Bahrain's first fintech hub. I've spent 8 years, which officially come to an end on Wednesday with the Economic Development Board, where we've had first-hand experience in terms of developing and building Bahrain's fintech ecosystem. Now, I always like to paint a story, and I'd like to say this in a few minutes about how Bahrain's fintech ecosystem has shifted. Years ago, a few individuals, including myself, going out to industry as part of typical routine checking out on industry, and we said, guys, the world is changing. Are you looking at fintech post the global financial crisis? And all of these technologies, whether it's blockchain, robo-advisory, crowdfunding, whatnot, and I don't want to say universal, but more or less universal response was, you guys are completely out of your depth. And this is just a temporary phase. Now, fast forward a few years, oil has gone down. People have really put a top priority on developing the entrepreneurship ecosystem, the digital innovation-driven economies, fintech has become much more interesting. So what has happened? If we've had this conversation a year ago, it is a very different story. 2 years ago, I'd have to say there were individual initiatives, but nothing at an ecosystem level. And so we said, you know what, we're going to prioritize the development of fintech. This is a national priority. The reason I say this is, and I've been, you know, people have said a lot of things. Khalid, are you guys encouraging people to lose their jobs? Are you encouraging automation and so on? And we say the following: disruption is coming, Central bank or others might not be able to protect you, only for a limited time. Are you ready for that disruption? And if you're not ready, then that has serious implications. The other point is financial services, and to me, fintech touches upon every single thing, whether it's financial services, it's telecom, healthcare, IoT, whatnot. But I just use financial services as an argument. It's the second largest contributor to GDP, and it's the largest non-oil contributor. If we're not ready for the disruption, we have a serious problem. We're going to have a very serious problem in Bahrain. What's been happening ever since? With the, sorry. with obviously the Central Bank of Bahrain, it's important because, you know, you need to have regulations. We said Central Bank of Bahrain, you're very well respected, decades of experience, but you have to really think about fintech, and you have to think about it extremely seriously. We're not talking about the ATM, NASDAQ, the traditional payment service provider company. We're talking about all of these technologies that we mentioned. And so after a lot of lobbying, a few things have happened. And I'm just going to point out the key ones, and obviously in the Q&A we can discuss this at length. I'll start from backwards. The bank has announced a fintech unit. So they've decided they need to have a dedicated fintech unit of the regulator that reports straight to the top. This will push some key initiatives in the country, which is important, and they're building out a team. The team is headed by a lady called Yasmin Al-Sharaf, and she's going to build her team around. That's one thing. The creation of regulatory sandbox, which I think is important because this is a lot of the innovation and allow the regulator to understand how creative ideas could be regulated and developed in Bahrain, including what we've seen, a lot of blockchain development. Yep, that's much better. And so obviously crowdfunding regulations, and there's also a cloud policy. And so that's on the regulatory side. I think what we started to see with the industry is people are really interested in fintech. And I put people in 4 buckets just so that, you know, the audience gets a much better idea of where we are. Some institutions are really interested. They don't know how to proceed forward, but they're interested, so that's fine. You've got institutions that are really interested, have a laundry list of needs, but they just don't know what to do next, whether they need the technical in-house expertise or they need to look for a certain provider. Or you've got the more tech-savvy players, whether it's the telecom players or whether it's the payment service providers that are interested, know what they want, have what they need the regulation. And there's a small bucket of people that are still in complete denial as to the changes that are happening. But one thing that is for sure is people are starting to converge to the unified definition of fintech, and we started to see that a lot of institutions are now really open to talking to fintech startups. And I could give a live example of something that has happened on the ground, and this is just one example which could be multiplied tenfold. You mentioned BFC earlier. I'll use them as a very good example. We introduced BFC to Stellar, which also has a cryptocurrency called Lumen. So Stellar is the alternative to Ripple, for example. One of the founders was also a founder of Ripple. And fast forward, and that was from just a 1 half-an-hour meeting in Singapore. BFC is already integrated with Stellar, and they're using the blockchain, using the Stellar protocol to shuttle money between the GCC in this region and Southeast Asia. And so that's just one example. Obviously, a lot of other institutions have spoken to Ripple, Stellar, and others. And so we started to see that there's a lot of traction there. One other thing which I think is really important is fintechs internationally are now interested in Bahrain. And I use the example of guys from the Bay Area looking to set up a cryptocurrency exchange in Bahrain. Now the Bay Area in itself, people typically don't look outside of the Bay Area. So for them to actually consider Bahrain to start a cryptocurrency exchange, that's one idea. There are other companies that have decided that they need to be in the sandbox, whether they're from the US, the UK, or Asia. And we're starting to see a lot of local interest in trialing ideas which were before not even allowed. And I have to mention one thing with the central bank. They haven't given a stance on cryptocurrency, so they don't view it as a currency. They haven't decided whether it's a security or an asset. But there are cryptocurrency exchanges that have gotten accepted into the regulatory sandbox. And the message to the central bank is ignore cryptocurrency at your own expense. Now, obviously, whether there's a national policy on cryptocurrency, I think that's a different story. So the message is there's a lot starting to happen. The needle has moved phenomenally quickly in Bahrain, and I think we're just at the beginning of what we can achieve. Maybe just a quick note on Fintech Bay, and I'll obviously pass it on to my colleagues. We're doing all of these initiatives we mentioned with the regulator, with the industry, building international ties with other jurisdictions. We decided to tie a lot of these initiatives, and it's not the end game, to Fintech Bay, which is a fintech hub. There's a physical aspect to it, but there's also a softer aspect to it. Now, obviously, the physical aspect, it's offices, co-working spaces where fintechs, corporates, the regulator, and others could interact. But to me, I think the key point, and this is both the opportunity and the challenge, is fintech touches upon everything, whether it's a central bank, financial institutions, the tech companies, tamkeen that we're talking about, education, BIBF, telecoms, and others. And if we can stitch that fabric of the different key stakeholders that want to really push the development of fintech moving on forward on a needs basis. So it's not the government just saying, we're going to do this, lay the foundations, but now fintech is being driven based on needs supported by the government, then that is really the key purpose behind Fintech Bay. And obviously it's going to launch on the 21st of February, and hopefully it's going to be a beating heart for fintech in Bahrain. I'm going to stop there.
Thank you, Khalid, for the amazing comprehensive explanation. I think that paints a lot of a very bright future for fintech in Bahrain, and it paints an amazing opportunity for anyone who has an idea to be able to develop and take it forward. My next question is for Gamal. Let's say I'm a developer and I have an idea for a fintech solution and using blockchain. What can Microsoft offer me as an option for me to take it forward?
Yeah, thanks Fawaz for inviting me, and thanks Tamkeen for organizing this. And congratulations Khalid, and thanks Hisham for the demo. Nice to meet you everyone. My name is Gamal Magdi. I'm actually the technology solution professional for Azure platform for Microsoft Bahrain and Oman, as well as I'm running our programs that are dedicated to startups, fintech startups, and students in general. So thanks for the question again, Fawaz. If you are a developer or if you are a fintech startup that is interested in blockchain, the Azure platform is your go-to place because of the amount of solutions that are there, ready-made solutions that you can leverage for blockchain, whether for whatever the workload that you're focusing on or the blockchain type that you're focusing on, whether Syscoin, Bitcoin, R3, single network or multi-node. All of these things are having some applications, as well as some third-party applications developed by our vast partners and ISVs on the Asian marketplace that you can leverage, as well as some first-party applications or like platforms developed by Microsoft itself for Ethereum Consortium, Ethereum Studio, the Azure Hyperledger for the Hyperledger management and all of that stuff. In addition to that, some integrations with your on-prem Active Directory or cloud Active Directory for identity management. Some integrations with the SQL database or the database that you're managing in general to track your on-prem data with the data that is on-chain or on the blockchain environment in general. We are talking mainly about solutions or applications to bring the blockchain to your enterprise, to have your own private enterprise or to connect with the open enterprise. So all of these scenarios are there. The platform itself is secured and compliance trusted. So this is when it comes to the capabilities that you can leverage, whether you are a developer or a startup. If you are a developer, you can have your own starting account to play with. The platform itself to fail fast and to minimize the risk of being exposed to open networks. So you can have your own sandbox environment or your trial environment to try and to experiment the scenario that you want to replicate, whether a private or an open scenario for the blockchain. In addition to that, beside the experimenting or beside the developers, the experimenting for developers, if you are a startup, a fintech startup or a startup that's having an idea that leverages any of these scenarios, you can enroll, or we can enroll your startup to the Microsoft BizSpark program that is mainly dedicated for startups. And we're having many good names in general that I can mention at the end, but we have CH9, for example, and we have other accelerators here that are onboarding the BizSpark entity as well as the BizSpark program, and can onboard you on how to get your startup enrolled on the BizSpark program. Simply, the BizSpark program provides credit for Azure services as well as Microsoft technical consultancy and support when it comes to starting up your business dedicated towards blockchain or blockchain industry in general. If your startup is a mature startup and showed like good potential, we can nominate you to a bigger offer that simply provides $120,000 credit of Azure to help you do more or bigger experiments or do more when it comes to the platform. You can integrate it in a mobile application, a chatbot, an IoT solution, and an artificial intelligence idea that can help your startup business grow in general and take it to the next level. This is simply how can we get the startups started or the developers get their hands on in general. And what we will be doing more often is to organize technical workshops or seminars on how to use these platforms when it comes to the capabilities and the technicalities on how to develop an application that's integrating one of these SaaS models for blockchain in general during the upcoming tension or the upcoming period in general.
Thank you, Gamal, for this amazing explanation. Just to FYI, I personally used and tried Microsoft blockchain service on Ethereum, and it worked very nicely. It was very smooth. When you sign up to Azure, you can actually get $300 worth of credit, which you can use over the next 1 or 2 months. So even if you are an existing bank, a startup, or even existing SME, a small business, you can actually sign up and get those credits and be able to test on an Ethereum blockchain.
For enterprises, there are different models of
okay.
like this is for these are for individuals and startups.
For startups,
enterprises, there are different
offerings.
Offers that we can work on with each and every enterprise on its own.
Perfect. Okay. Just to be clear, I mean, I know we're talking about blockchain, everything, but I mean, you have to understand, blockchain is not for everything, right? Yes, it can reduce your cost if you deploy an application on blockchain. That's fine. If you are, let's say an example, if you are an e-commerce site and you sell T-shirts or cookies or cupcakes, does it make sense for you to use blockchain? Not really. It's not really applicable. So, right? What can be useful for an e-commerce site to be able to use something within the lines of blockchain? Here's one example. You're an e-commerce site, you get charged 3% for each credit card transaction, right, that you make. That 3% goes to the issuing bank, it goes to the credit card issuing company, Visa, MasterCard. What if you can allow your customers to use cryptocurrencies to pay in Ether or Bitcoin? Guess what? That 3% goes straight into your pocket as revenue. So this is one option for you to be able to use, right, to benefit your business, to increase your revenue, right? It doesn't have to be a blockchain per se, but that's an added value. Another example, which actually Hisham can tell us more about, what are some examples that blockchain is not useful for example?
Right, so basically people think blockchain is the be-all and end-all of developing an application, but that is a misnomer because a blockchain can only store so much amount of data. You've probably heard about blockchains getting too bloated, too slow. So if for instance, if you have a blockchain that protects intellectual property, and you're a film studio and you want to register your film, that you're not going to actually upload a film or a video file to the blockchain. It doesn't make sense to begin with. You would actually hash that video file, for instance. You'd get the fingerprint, as I've shown in my slides, of that particular file, and you would use that as part of the data that you put in the blockchain. You would say that that fingerprint identifies my intellectual property. So these fingerprints relate to something, to real assets in the outside world, in your traditional databases. So that's how you should approach the usage of a blockchain, where you actually have anchors to your actual real-world assets that are hosted in traditional manners, basically.
Yes.
Though I'm old, but I'm fully support any kind of change.
Yeah.
I like what Khalid said, that the needle is moving.
Yes.
But I hope that we follow the right direction of the needle. What's said here reminds me of the early of this century, early 2001, 2002. All the big five consultancy or consultant firms advise us to use the surplus of the oil into IT.
To use the what? Sorry.
The surplus of the oil.
Okay.
The oil money.
Okay. Yeah. And put it in IT. Okay.
The oil prices were very high.
Yeah.
We have a surplus. And a lot of people, including government, invested in it. IT, especially the internet. And when the internet burst,
the bubble.com. Yeah. Yeah.
Today you are encouraging us to use blockchain.
Yes. Yeah.
But I mean, none of you has mentioned what are the negatives. I want to see is what analysis of the blockchain.
Yeah. Okay. To answer your question, yes. Okay. No one can predict the future of any technology, right? I mean, that's just impossible to predict, right? We have to just go with it, see what happens at the end. But based on what we see today with blockchain, the success of cryptocurrency trading across the world, the success of ICO market, all these technologies and applications are being powered by blockchain. Bitcoin, the cryptocurrencies, the ICO markets, and so on. The different use cases that, for example, Dubai government is investing in blockchain. We all know Dubai government is not going to go blindly and invest in a technology without really doing their due diligence and their analysis on it, right? And that's one of the reasons why many different governments are focusing on this technology. I'll give you one example. When Facebook started, it was social media, let's use social media. No one was able to predict how crazy and how popular social media would be. But look at it today. Every marketing strategy, every advertising strategy incorporates social media in its central planning. Nobody will tell you, go and advertise in newspapers and radio, forget social media, because it became the mainstream now. So that's one of the reasons. You can't predict, but based on the current scenario, based on the number of companies, multinationals, Microsoft, Cisco, many multinational companies are contributing to Ethereum Alliance and the Bitcoin Foundation and the releases. These indicates to us that it's going to be there for the next 10 to 15, maybe 10 years. And the application that we see of it that's going to come out and the hackathons, it seems to be we're going in the right direction. And I'm sure Khalid Saad can elaborate more on this point.
No, I think you raise a valid point. And what is important, I think, is to have a national strategy of where we want to be with blockchain. Blockchain in isolation doesn't really add any value. And so obviously Dubai has a blockchain strategy, but for Bahrain, what does it really mean for Bahrain to have a blockchain strategy? Where do we want to play? One live example of an institution that is using blockchain globally to transfer money is BNP Paribas. So BNP Paribas now, between any branch or subsidiary of BNP, they're using the blockchain. That gives them certainty, it's immutable, it's instantaneous, and it's a fraction of the cost. And I think that's a live example. Fawaz mentioned a few of these global bodies. There's also R3 Blockchain Consortium, which has many global banks doing test cases on the blockchain to make sure that it's secure, it's practical, and it's sustainable. So obviously with Bahrain, we're at the beginning. There's still no national strategy as to what blockchain means for Bahrain, but that's work in progress. Obviously there's work to be done at an institutional level, but blockchain done in isolation doesn't really add too much value. And so we're not naive to the risks maybe with blockchain. Obviously any technology has its own risks, but I think the potential is huge, and we're just in the beginning.
It's working?
Just I will make it loud.
Okay.
This is related to the technical. There are different blockchain platforms like Hyperledger, Ethereum. Even all the blockchains are required mining. If all the blockchains are required mining, that question is if or not blockchain requires mining. If what the miners will benefit from mining, what the miners will benefit from mining.
Okay. All right. Okay. So the first question was about what is the most the best blockchain platform to use. The second was on if miners are mining, what is the benefit for them? And the third one was?
No, all the blockchain platforms require mining.
Okay, yeah, or not. Okay, so.
Mining is required,
yeah.
What miners will benefit.
Okay. I can speak personally about what I tried. I can't speak on other blockchains. The ones that I worked with was Ethereum specifically, and mainly because of the smart contracts that it provides. In the industry, because again, Ethereum was designed to support companies who want to create smart contracts. You cannot do a smart contract on Bitcoin blockchain. Actually, you can, but it's very, very difficult. Why is that? Because there's no specific programming language on the Bitcoin blockchain that allows you to do that. It's very difficult, it's more time consuming. You work with complex scripts to be able to deploy it. That's the main reason. Ethereum was designed specifically for any company, any bank, any financial institution or government to be able to do that blockchain for. On the Ethereum. I can't speak on other blockchains because I'm not sure. The Ethereum and Bitcoin, yes, they do require miners. And I think maybe Hisham can elaborate more on the mining part.
Yeah, there are of course some pre-mined cryptocurrencies that you don't mine, and there's some other economic incentive for people to participate in the network. There are ones that don't require mining because they are tokens based off Ethereum, so you have to make that distinction as well. They're built on a pre-existing blockchain, and they're just simply decentralized applications. But going back to blockchain and mining, like I showed in that hashing example, when it comes to Bitcoin, for instance, you just don't calculate a hash and you use that value. You have to calculate a hash with certain requirements, criteria, like it should start with 5 zeros. How would you find 5 zeros in a hash? What kind of random number should you add at the end when you're recalculating the hash to get those 5 zeros? It's a completely nonsensical mathematical problem, but that's the difficulty aspect of mining. And it increases in difficulty as the network grows. And so the miners go out there and try to find that random value that would make the hash meet those requirements. And when they do, they actually, part of that block that they're finding that hash value for, they would actually have their own transaction where they get rewarded for solving that hash value. So that's how they built that. Satoshi Nakamoto, that whoever he is, a group of people or not, that's one of the really clever ideas where he kind of managed to muster and incentivize groups of random people around the world to do this. Because there was some underlying incentive behind it. So that's basically the factor behind mining. So if you're deploying your own blockchain, a private blockchain, you can forego that. You can just base it purely on hashing without having any difficulty or mining difficulty. And just by sheer force of the consensus of the participants, the more nodes, the more participants you have, like in the supply chain example, if you have 25 or 26 different companies participating in the network of that blockchain, even if one of them manages to kind of mess about with the hashing, 1 out of 25 is going to be wrong, and the 25, the consensus, is going to tell him there's something wrong with your system, somebody's been playing around, and they're going to overrule him. So that's an interesting aspect of blockchain. There's self-governing. There's an aspect of trustlessness. I don't have to trust you. We're part of a huge network, so it's kind of trustlessness by sheer number and mathematical brute force in a sense.
Thank you, John, for that elaborate explanation. Okay, I just have a couple of questions here. Just a question for Mr. Khalid Saad. We read recently, or there was the news that Bahrain Fintech Bay signed up for a robo-advisor in the Fintech Bay. How does that sort of contribute to the community, and how does that help people who want to look into this kind of Fintech technology?
I think Fawaz is referring to today's announcement of Robust Wealth looking at signing a partnership with Bahrain Fintech Bay. I think the idea is simple. We need to introduce new concepts to Bahrain, concepts that don't exist. And I think the value add is if you actually bring something that's not here. I think it might be a bit detrimental if you actually bring something where there's an abundance. And I think the priority should be for the local ecosystem to actually showcase what they can do. Now, the idea with Robust Wealth is obviously it's a B2B robo-advisor firm. Doesn't really exist too much in this part of the world. And the idea for Robust Wealth is to use Bahrain as a regional platform from which they would expand their businesses. And so for Fintech Bay, it's one, it provides an opportunity for corporates to be exposed to a new technology. And then two, it provides an opportunity for a firm that would have never initially thought about Bahrain, mind you, the Middle East, to actually come here, explore the potential, and use Bahrain as the kind of ideation, localization, and dissemination hub from which to push. Now, there are a couple more that are on the way. We're starting with Robust Wealth, but I think we promised to add value to the ecosystem. Part of that value comes by exposing people to new technologies that don't really exist. And so I think this is just one example, and we're looking to multiply that multiple fold. Now, on the flip side, the more we understand the needs of the ecosystem, the more we'll be able to successfully match them with companies either such as Robust Wealth or others that could help them meet specific needs, one, to help increase their competitive advantage, and to help them offer much better services to the market. So that's the main concept, literally. And one thing that we tell fintechs, whether it's local or not, if you're part of Fintech Bay in one shape or form, it's our responsibility to connect you to the ecosystem. And I think that's the most important point. So if Robust Wealth decided to look at the region in isolation, it's a much more daunting task than say, listen, we know what you're doing. We can tell you that there is an opportunity in the market, and let us, obviously by using Bahrain, connect you from day one to the local ecosystem. That completely changes the ballgame and the perception of Bahrain. And we've seen that this formula, aside from fundraising, has been the single most important characteristic of why some companies would look at Bahrain.
We basically, as a blockchain enthusiast, we understood the hassle and problem of trust to adopt cryptocurrency. So should we accept that to see if in near future the central bank will, they have any plan to, just develop their own currency, digital currency in regard of that? Because if we see that for smaller economies, there is a chance if regulation are a little bit, crypto friendly, so might be that would attract, for business to enhance, to work there in Bahrain, so that's how we can, grab the talents as well. So what's your point on that?
Maybe just to address your point, and obviously I can't speak on behalf of the central bank, but the idea of a digital dinar on pretty much on the blockchain was floated. It might not happen in the immediate or short term, but that's an idea that's already been floated. Now, regarding cryptocurrency, I can tell you that there are 3 companies that are accepted in the sandbox that are looking at cryptocurrency to be cryptocurrency exchanges, and this is, I think, the beginning. So the central bank did not say no to cryptocurrency. They obviously still need to form an opinion of how they view cryptocurrency, and the fact whether they want to have a digital dinar or not is yet to be seen. But given that they've already accepted 3 cryptocurrency related companies into the sandbox, they've been open to that, and they want to learn more about obviously the implications of cryptocurrencies. We're not at a stage at the moment where there are ICO regulations. So you've got, obviously countries like Singapore or Hong Kong, which are pretty advanced. You've got one extreme also in Belarus that said anything is literally allowed. That's not necessarily a good thing, but I can tell you that there are people on the ground here that have looked at ICOs. And I know one specific example of a company that we're setting up. I mean, we as EDB, obviously in Bahrain, that is Bahraini guy raised $2.5 million on an ICO in Singapore. And so I think it's a bit maybe too early for Bahrain to look at dedicated ICO regulations, but for cryptocurrency, they've shown a serious willingness to look at these and better understand their implications. And I think the other important point is central bank wants to push eKYC and on the distributed ledger or the blockchain. So they're really interested into it. Again, it goes back to what is the ultimate goal or what is the strategy of how we want to use blockchain. And eKYC could be a test case, aside from cryptocurrency exchanges.
Thank you, Khalid, for that explanation. I just want to add one point here. Basically, this is all new to all of us, right? We've never seen this technology before. And this is why it's super exciting. The benefits, what blockchain offers as a technology, as we said earlier, transparency, security, and trust. We discovered that for sure it provides better security from the customer perspective to be able to conduct your transactions, government transactions, healthcare services transactions, and fintech, financial service transactions. All of this contributes, but we don't know what will be happening. Like in the next 4 to 5 years, we're going to see a very interesting shift into how we do our transactions for any individual across the globe. And the fact that many startups are coming up, the fintech in the UAE, in Bahrain, in the whole world, in Malaysia and Singapore, all are just jumping on this technology to see what it can offer and what can be done. Yes, there will be startups that will fail, that will not work. Yes, they will pivot. Yes, some may fail, some may be very successful, but still we don't know because it's still very new to us. One example, in BIPD, we're doing a blockchain project with Microsoft actually, and for the voting of the members of parliament for next year. And currently we are exploring it as a POC level to use it and test the technology and how it can benefit to bring more trust to the voters of the citizens and the residents of Bahrain. The reason for that project is to eliminate fraud and tampering in the voting registrations of the public for the members of parliament next year. That's one of the main benefits that we want to be able to utilize from that project. There's also other initiatives in the government, like the CIO and the IGA, sorry. They are considering blockchain for different government initiatives to be able to use it, again, to benefit the public, to benefit the resident and the citizens of Bahrain to be able to have more faith, right, in the system. I mean, this is where we're going. This is where it's heading, and we want to take it further and see where it goes from there.
So yeah, everybody's saying, there's a bit of awareness about blockchain technology in general. And yes, it's going to be a bloodbath. A lot of money is going to be exchanging hands, and it's going to be lost, and ideas are going to not get off the ground, but they're going to be survivors. And we've already seen kind of examples of that. So in Ethereum, you had an application where basically an organization called Decentralized Autonomous Organization, which was supposed to be an investment firm that lives on the Ethereum blockchain with people participating in it. They lost something like, what happens is that they did the smart contract, they deployed it in Ethereum, and it had bugs in it. It had security holes. And they lost about $50 million or something like that. And then the Ethereum guys, they said, what can we do? Well, they reached a consensus that we have to roll back, and then there was a rift. There was a split in Ethereum. So now you have Ethereum, which cleaned up the hack, so they reverted what happened. And then you have Ethereum Classic, where you have these guys who politically said that, no, once it's in the blockchain, you can't reverse it. It's not Ethereum's fault. It's the fault of the programmers who didn't know how to do a proper smart contract. So we're already seeing cases like this. And when it comes to governments, financial institutions, having a play with this, they should do it with a nuanced approach and an approach that, as Fawaz said, a POC approach to see how it lives up vis-a-vis the traditional approaches they've done until, they get their footing in. And it becomes, once people stop talking about blockchain, that's when I think there is enough confidence in blockchain. It's the same with the dot-com era. When people started talking about dot-coms, it was so much noise. But once it dies out, once the hype dies out, I think, once the idea matures, the technology matures, then we're going to see a lot of things, more positive things than more negative things, and things are going to get better.
Just quickly, I think, and this is an important area. Now, Bahrain is going to introduce a wage protection system. Maybe we're a bit late to the game, but the idea is how can you bank the unbanked? And the moment you give the unbanked a digital solution, obviously international remittances, and it's either wallet to wallet transactions become really important. And that's an area where blockchain is going to play a significant role in one, ensuring security and then the cost. And that's going to touch upon a lot of different players, whether it's the financial institutions, telcos, and others. And that's one important area that's going to happen very soon.
Yeah, it was a very interesting session. As a question to the Fintech CEO, Mr. Khalid, what is your view or the support we can expect for the other technologies like artificial intelligence or machine language? Anything you have in plans? So would like to listen about that.
No, sure. I think we've remained pretty open to all sorts of technologies, obviously deep tech, artificial intelligence, machine learning. We haven't really specified a certain vertical or niche. I mean, obviously we're talking about blockchain here. We probably mentioned robo-advisor or not, but we're pretty open to artificial intelligence and I think machine learning. And these are things that we should be looking at. I mean, just certain new technologies like social credit rating or credit scoring. This is using a lot of artificial intelligence, and I think that's an important area we need to look at. So we've been pretty open to that. And I think the general stance and even the central bank stance is now if something is applied outside, why not also apply it here? And that also includes artificial intelligence. And one example I say this simplistically, but I'll mention a telco, and I always say telcos really understand their customers probably better than a lot of others, because for a lot of financial institutions, especially insurance, it's a transactional relationship. I renew my policy and that's it. But with a telco, obviously there's a lot of data, so there's a lot of behavioral analytics, data analytics. And if you understand my data, you can derive certain themes, and using artificial intelligence or deep learning, you could then specifically push me a certain product. For example, Khalid has a certain pattern using his data. He looks like a bankable guy. Let me push him XYZ products. And so I think there is massive scope for artificial intelligence or deep learning. And I think the message is we're open to that.
Yeah, you mentioned about the smart card where you can hook the amount you want in the future. So can this replace the derivative options, exotic derivative options for dealing room, for example?
Okay, I personally don't have much experience with derivative options, but anybody can attempt this one?
Well, I mean, you can actually have exotic financial assets on a blockchain and as a smart contract, as long as you program it in there, program certain criteria. Now, bear in mind, it's not going to go out there and automatically know what's happening in the outside world or in the financial market. So you have to build in conduits and rules and regulations into that application. And who are the basically stakeholders in it that are entering that information, whether it's the financial prices that fungible asset is based on, etc. So you have to look at it from that point of view. It's a bit more involved process. But the bigger question is, do you need to put it on the blockchain? Why do you want to put it on the blockchain? You have to look to see if it makes sense, first of all.
For risk management purposes, if you want to build a risk management system for the banking systems and you want to hedge your price not to exceed a certain amount, can you use blockchain
Well,
to,
I mean-
to design a system or to design an application
Absolutely.
for
Yeah.
risk management purposes?
Yeah.
Because at the moment, maybe there are few risk management or risk monitoring systems that banks use.
Yeah, and as we speak, there are people researching these ideas and implementing them in one way or another. And again, what you have to think of is a specific contract and how it would interact with real-world financial information, and who controls what information gets into the blockchain for those contracts to be affected, to be triggered. On the face of it, if you have it on the blockchain, you massively reduce operational risk. So that's one aspect of having stuff on the blockchain. But as far as market risk and credit risk is concerned, then obviously you will have to code it right, and you have to be really careful with that. Have pilot projects. You don't want to have a recurrence of the DAO fiasco with Ethereum. So you have to be really careful when you're architecting these things.
And will Microsoft, for example, if you have an idea of risk management system or risk monitoring system, will they help to design the software for the banking sector?
Yeah, so the consultancy service is mainly dedicated for the startups or for the ideas that are around this area. So whatever the scope that you are focusing on, we have a dedicated business or the consultancy desk that is mastering this area and should be working on a one-to-one thread or on a one-to-one support channel for this workload in general.
To write the soda code of the system?
Or
just to program the software?
So pretty much I don't think it can go to the pseudocode, like to the details of writing the pseudocode, because you should come with your own planning. But when it comes to developing, like writing the code, we have the people, the go-to people that can help with that. Or if you want to go one step backward for the designing phase for the pseudocode, I think we might have some people that are focusing on this area as well.
Yeah. Okay, thank you.
No problem.
Yeah, just before that, I just want to share with the audience one question that came up in the last technical or blockchain talk that we did. Okay. So the question was about, in the session that we did in November in GEW, the question was, the guy was asking, if blockchain gets very popular, gets implemented in the financial services, is it a threat to existing jobs in the industry? Is it going to eliminate jobs in that industry and the bank or the entity who's applying it? And the answer is yes and no. Yes, because one of the reasons is in a blockchain transaction, in a traditional transaction that you do, if you do a trade on gold or oil or whatever it is, it takes about 3-4 days to clear that transaction settlement, right? In a blockchain transaction, the settlement happened within hours. So you don't really need all that back office operations and treasury operation that happen after a trade for you to be able to complete that transaction. So the people in that trading room or in that treasury room might be a bit threatened because their function can be a little bit irrelevant at that point. Again, that's assuming a lot. Assuming that trade transactions happen on the blockchain, maybe, maybe not. It's now being discussed in the US, I think I just read last week, of how they can trade securities and equity using blockchain transactions. Is it going to add value? Yes, no. There's companies, one company called Digital Asset Holdings. The CEO, her name is Blythe Masters, who is a former JP Morgan executive who is actually doing this in her company. She quit 2 years ago to start Digital Asset Holdings specifically for the purpose of trading securities and equities on the blockchain for different banks. So no, it may not be a threat to existing jobs because the same people in tech can actually reskill their skills and relearn the technology and be able to do blockchain or learn about blockchain, how it can be applied in that bank. I hope that answers it. Okay.
I just have like a few questions since, mashallah, we have from 60 to 70 people in the room. I just want to grab out an insight here. Who is interested in developing solutions that inherits blockchain technology? Can you just raise? Wow, that's amazing. So I think, yeah, this is something that we can work on, organizing a dedicated seminar for building applications with the blockchain as well. Maybe another question. Is there anybody here started mining or interested in mining? Started? Okay, great. Interested in mining? Because one of the out-of-the-box solutions that people are not really focusing on or not considering when it comes to mining because of the investment and all of that stuff, that you can invest on a virtual machine where you can build a virtual machine with the required graphic cards and computing power that you might need with way less amount of cost or money, and you can host your virtual machine in whatever region that you are building for, and you can like have your virtual machine working on the blockchain type that you are interested in, whether it's Ethereum or Bitcoin or whatever. Thank you for this insight.
We had a question here. Yes. Yes. One more.
I actually have two questions to Mr. Khalifa. The first one is about the blockchain solving the mining process. Why is it complicated? Why the complication of having a difficult problem that need to be solved for the transaction? We understood that each block have 6 transactions or 7 transactions. And that block is randomly assigned to X number of miners. Is the assignment of miners happens before, is the selected miners to do the mining actually solved a problem before they get selected, or they selected then they solve a problem? And why there is a difficult mathematical problem that consumes too much resources for nothing? Just assign it to X number of people, let them do the transaction, that's it.
That's a very good question. And I don't profess to know all the nitty-gritty mathematical details out of it, but I do know the superficial economic incentive that was built in the original white paper for Bitcoin is that as the network grows, they want it to be harder to validate transactions. And the idea was that there's a limited number of Bitcoins that can be issued. And during the mining process, one of the rewards of that mining process is that you get a Bitcoin reward. Now, as far as the miners trying to find that hash value, the proper hash value for a block, there's no way to beat around the bush around it. They're gambling their money, energy, cost, and time for the chance of actually solving a block hash and then adding it to the end of the chain. And yes, there's a possibility that that's not going to happen. You get knocked out, somebody else solves it, and that's why it makes more sense for these guys to pull in their resources and become huge mining pools that solve a particular block. And the block would not only have a few transactions, but it would have so many transactions at the same time. So as the Bitcoin network grew, it made more sense economically. Don't think the original creators of Bitcoin foresaw that people are going to pool their resources and they're going to solve blocks with much larger sums of transactions in them. So that's basically it in terms of the economic incentive, while still maintaining, in a way, the distribution of Bitcoins amongst the miners themselves as an incentive. So it kind of slows down. Yes, the difficulty increases so many folds every time.
So as time goes, the difficulty increases.
Yes, yeah.
And the number of, it's like getting into a gold mine.
Exactly.
At the beginning you have too much gold, then the more you dig, you have less gold.
Yeah, yeah.
But it is the same, it should be the same effort. I mean, I'm mining, when I crack the stones to get the gold, it's the same crack that produces.
But it's not the same effort, yeah, because actually the difficulty increases. That random factor that they have to look for becomes harder. So the actual factor to meet the hash requirements, that random factor gets harder, mathematically gets harder. There's an added element to it. For every growth in the network, it becomes harder, so you have to dig deeper, basically, if you will. So to use a real-world analogy, if you dug 30 kilometers, you got to dig like 50 kilometers in order to reach gold again, and it gets harder and harder, basically. Yeah.
The second question is related to investing in cryptocurrencies now for us here in Bahrain, for example. If I want to invest X number of dollars today, and that within 2 years, 3 years became whatever number of millions, I hope, for everyone here, then how I can bring the money from those exchanges to Bahrain, to my bank account, without being suspicious or anything that can be thought of?
I think maybe I'm not the perfect person to answer this question, but from a regular guy's perspective, I would say that deal with some a well-known Bitcoin exchange, such as CEX or Coinbase or somebody like that have audited records and trails. Don't try to kind of obfuscate your Bitcoin transactions. Keep a record of them. When you're sending monies to the exchange from your local bank here, and the transfer request indicate that it's for cryptocurrency investment. So, these things are, as far as I know, neither looked upon in a positive way or a negative way in Bahrain. So I think you can do that. But again, I'm not a legal expert in these matters, so don't take my advice for that.
It's yet to be seen. Actually, I'd have to say I personally trade crypto, but haven't taken money back yet. So I'm not quite sure. Obviously, I think in the case of, let's say, the Winklevoss brothers that have turned millions into $1 billion, that's, I think, a completely different story. I'm not sure, but I have to say this. I think to Hisham's point, there has to be trusted. There has to be liquidity, and obviously the initial arrangement between sending the money from the bank account here to the initial one, that could take some time. At least mine did. I had to figure out where the money went, and it took some time, but it's there. But I'd like to think that for smaller tranches, it should be okay. It's just like transferring money from one bank account to the other. But I can't admit to having actually tried that, especially in large sums of money.
Yes.
And we got the same question, probably.
Yeah.
I understand there is a thin line.
Can we get the mic?
I think my voice is loud enough.
Yes, go ahead.
There is a thin line between the blockchain and the cryptocurrency, such as the Bitcoin.
Mm-hmm.
But in the blockchain side, it is legal. It has been worked out even in our own jurisdiction here and in the GCC in the Gulf. But in the Bitcoin and the cryptocurrency, it's illegal.
Mm-hmm.
In the 22nd of this month, which is last week, the Central Bank of Bahrain, represented by the governor himself, has quoted very clearly that Bitcoin and cryptocurrency are not allowed in Bahrain.
Yes.
And even there are 2 exchanges has been shut down in the United Arab Emirates by the Central Bank of United Arab Emirates rather than the IFC. But let me just quote very quick, and I need your clarification in this, I would believe, which is the Rashid al-Ma'raj when he said that تداول العملة الرقمية بيتكوين أو الكريبتوكرنسي من قبل الوسطاء الماليين دون ترخيص يعد مخالفا لقانون مصرف البحرين المركزي وسيعرضهم للمساءلة القانونية. I know, I understand there are a few lawyers in here. I'm not pointing out on you guys, but without a license, exactly. What sort of a legal implication when it goes that مساءلة قانونية goes of any exchange of a cryptocurrency and Bitcoin in our beautiful island in here, Bahrain?
Okay, from my perspective, again, I just want to clarify the distinction. Cryptocurrency is an application, it's a type of application on the blockchain, right? Using blockchain is not illegal, we know that. Using blockchain for different applications other than cryptocurrency trading is not illegal. It's actually perfectly legal and encouraged and supported by the members of the community, by the government, by the Dubai government, and so on, and even in the US. And that's why it became very popular. The misconception is because people said, oh, Bitcoin is fraud, and I think there was one case where Jamie Dimon of JP Morgan last year, he said Bitcoin is a big fraud, and this created like a ripple effect in the market that it should be illegal. But then they started seeing blockchain, and they said, oh, okay, we can use blockchain for other applications, for real estate, for car manufacturing, for supply chain, and so forth. So it's not legal in this sense, but it's legal if you trade cryptocurrencies. That's where the distinction is, right? So just make sure, we have a clear understanding. The blockchain as a technology is available and encouraged to be used and safe and secure as we know it today, as we see it today. The cryptocurrency part of it, because of the fraud case that happened, because of the hacks that happened on those exchanges, and because of the different perceptions of the central bank, and I believe it's a sort of a threat to the existing central banks because it violates the terms of a fiat currency. Again, in fiat currency, the central bank controls the supply of money in that country, right? So that's why the central bank can print money as they see fit in the economy, increase money supply, reduce money supply, right? So when when it comes to cryptocurrency, the central bank no longer have that control, right? See, one example is this. If you go and you put your money in cryptocurrency and you store it in cryptocurrency, right? You're not putting it in a bank. You're not putting it in financial services. You put 1,000 BD in cryptocurrency. I put 1,000 BD in cryptocurrency, and the same with 10,000 people in Bahrain. What happens? If you don't deposit your money in the bank cannot loan that money out and cannot make their fees and get their interest and loans and everything. That money is outside the circulation. So it's a bit of a threat to the central bank model. And that's one of the reasons why they view it as a threat, or because they don't know about it, they're afraid of it. It can be a bit of a risk. But I'll let Khalid to elaborate on that point a bit more.
Maybe there's a distinction. It said بدون ترخيص. So pretty much, this, if you want to act as a broker for cryptocurrency in Bahrain, and you know there's stories of individuals, whether it's here or in Saudi, that know a lot about cryptocurrency. You just pick up the phone. Hey, Abdullah or Ahmed, I need 10 bitcoins, and they kind of facilitate that for you. So that's what the central bank is trying to clamp down. We've even seen ideas of, say, you want 10 bitcoins? Sure, I'm going to give you a hard coin that says 10 bitcoins. So there are crazy ideas out there. I think with the central bank, they've been clear. You want a cryptocurrency exchange? Go to the sandbox. We're still trying to figure out how to regulate this best. Obviously, an existing brokerage or individuals cannot be seen to be trading cryptocurrency. So I cannot solicit money or claim to be trading cryptocurrency. Now, having said that, as Khalid or any individual, I can open an account with a cryptocurrency exchange anywhere else in the world and nobody can stop me. And I think with China, when they clamped down on crypto, they realized that people had an issue transferring money outside of China. They opened crypto accounts, put it in Bitcoin. The moment it's in a cryptocurrency, China can do anything whatsoever about that money. And so I think for Bahrain, it's not so much you cannot trade crypto, but you just have to do it in a legal way. And I think that's the important thing. Another point, and we shouldn't mix crypto, Bitcoin with blockchain. It's just the underlying fundamental principle or technology, and that's a huge distinction. And so with the central bank also, the message was to them is, do not try to regulate the technology. Regulators will never ever catch up with the technology. Technology is moving at such a rapid pace that you can never catch up with it. Just understand what are the implications of adopting a certain technology on customer protection, financial contagion, anti-money laundering laws, and so forth. And so that's pretty much the message that I'll leave you with.
Good evening, everybody. Actually, thank you first for planning this event. My name is Hossam Tarazi. I'm Jordanian, by the way. I'm trying to talk a little bit about cryptocurrency. Actually, I'm doing PhD research. I'm enrolled as a PhD student in Canada in cybersecurity. My supervisor, I have a committee. One of the committee is a mathematical professor, a professor in the mathematics department. His major is mainly combinatorics. When I heard that there's a mathematical difficulty in the blockchains because, as Mr. Khalifa said, there's some gaps in that field. I think the field of combinatorics itself is still under research. I'm currently doing research with him. He's giving me every day some problems I need to solve. In mathematics, they call it the problems or questions unsolved.
Can you just skip to the question, please, because of the time?
Okay. The thing that I'm trying to say that I'm really trying to search for stakeholders or entrepreneurs that can share a business with me. I'm trying to open a new business as an investor here in Bahrain. By the way, I'm new in Bahrain. This is my 3rd month. I don't know who can join me. I don't know who can join me as a IT professional in security or cyber security, because I have a master's degree in cyber security also. That's it. I do not actually, as a researcher, I do not stand with blockchain. Excuse me, with bitcoins as a topic. It's still unsecure. Yes, thank you.
So basically, you have a startup idea that you want to start, and you're looking for partners, right?
Yeah, I have
Okay.
some.
My personal advice is you can approach Tenmu, you can approach Tamkeen for this option. You can actually participate in any kind of a startup boot camp where you can pitch your idea and see where it comes up, and you can meet some different people that can share that same idea that you can take things forward with you.
Yeah, thank you. I already have one investor with me, and we are looking for another.
Okay, perfect.
Thank you.
Thank you. Next, any other questions? Yeah, sorry.
So a blockchain is used to authenticate a transaction, right? Is that?
Yeah.
Think of a blockchain as a database, okay? And yes, correct. It authenticates the authenticity of the transaction that's going on, whether it's writing information or something like that.
Okay. Since most of the transactions in any company is authenticated internally, can it all be authenticated on a blockchain?
No. Well, sorry. Are you gonna?
Yeah. So it's all of a matter of trust, right?
Yes.
Is this transaction
Yes.
authenticated?
Yes.
So it solves the problem of trust and transparency.
Exactly. Yeah.
So if that's the case, then there wouldn't be auditors, because what auditors does is to audit and make sure that transactions is
Absolutely, unequivocally, no. Auditors rejoice, you still have your jobs, because as far as auditors are concerned, they're integral. If you go to the supply chain example, for instance, you have many stakeholders, and you have a supplier in Colombia for bananas, right? And the supplier in Colombia is going to enter into the blockchain that he's shipping a crate of 40 tons of bananas or whatever somewhere. And before he does that, one of the other stakeholders in the blockchain is his auditor. So his auditor has a key, and he has a key, and they both have to enter the transaction together, otherwise it's invalid. So you can build these rules. Remember I said there are rules in there, and the more architected these rules, the more deliberate they are, the more secure and subject to data being entered correctly and authenticated by more than one party. And obviously there are different levels of right access within the blockchain for each participant in it. So you've got the auditor, he still has his job, he still has to go to the banana guy and then has to say, yep, 40, okay, let's enter it together. Each one has a private key, they all enter it. What they do, they take the hit, the risk. If they're both colluding to defraud the chain of participants in the blockchain, then it would show. Eventually, they can trace it back to the source easily. In the real world, you can always get rid of the paper trail. In a blockchain, they can't, so if they go, oh, we're gonna get found, we've sent 20 kilos instead of 40 kilos. Well, they can't erase that because it's a distributed ledger, it's being hashed by all the others, and if they change anything, the hash is gonna change, it's gonna corrupt the entire change, and the consensus is gonna be 1 out of the 25, these guys in Colombia have cheated. And who did it? Who did that transaction? Oh, and they can actually pinpoint the 2 people who had the private keys used. And that's where you get that, it really prevents you from trying to defraud the other participants, basically.
Okay. A second question is about the confidentiality.
Okay. Yeah.
Because between an auditor and a company, there's a confidentiality agreement.
Yeah. It's all about designing, again, this is people familiar with user experience and user interfaces. It's all about designing the proper interface and then building the blockchain or the decentralized application that rides on that blockchain. So before sending in the data, even if the supplier, for instance, the supplier has a trade secret, but that needs to be on the blockchain, and he doesn't want everybody else in the blockchain to read it. So before sending that data, he encrypts it with his own private key. And that private key has a public key that he gives into participants that he wants them to read it. And so what happens is that the data is gobbledygook. It doesn't make sense. But you enter into the blockchain, and it's also hashed. So there's a lot of hashing of stuff that doesn't make sense. excuse me, but that hash in itself, basically, even if that encrypted data has been changed, the hash is going to change. It's going to show that there was some tampering. So yes, you can input very private, confidential information in the blockchain. You could limit access to certain participants. You can build an application where it only retrieves certain data for certain people and requires encryption keys for others' data. So all of these things, think of it as a regular application. People use fancy words like smart contracts and things like that. It's just an application, and you can do whatever you want to do within certain limits with that application.
Just to add that point about confidentiality, there's another option. In the Ethereum, it supports private chain. What that means is it's a permission-based blocks. If your company wants to register transactions on the private chain, what happens? You have to have access to see those the transactions on those private blocks. What that means is, if anybody wants to see those blocks, they will just see asterisks or masked text, hidden text. They cannot see the actual transaction details because you programmed your application to register on a private chain, which means you're giving access to permissions. An application or a user must have a username and password authentication to be able to see those transactions on that private blockchain because you programmed the application to be on a private chain. There is a blockchain called Quorum, which is being developed by JP Morgan, and it's based on Ethereum. It's actually specifically designed for companies who want to maintain private confidential records on a private chain. Many of those companies are like for example, healthcare, hospital records, patient records. They want to be privatized, they want to be masked or to be permission-based. Companies or government transaction records like title deeds for real estate, government-issued title deeds, car registration assets for government issued, they want to keep them hidden or keep them privatized. Those are some of the use cases where companies want to be able to use it or store it privately. Any other questions? Yes.
Just I want to know about this Ledger Nano cryptocurrency hardware wallet. If anybody knows about that. About the Ledger Nano, a cryptocurrency hardware wallet.
So this talks about storing your private keys. Your private key, you can store it on a what's called hot storage or cold storage. Hot storage means what? When you store your private key on your mobile phone, it's always connected on the internet, which means it's prone to be attacked or hacked. That's called hot storage. Cold storage means you're storing your private key on a USB device, disconnected from the network, and you store it in a safe or somewhere. There's a now company that started from France, I believe it's called Ledger, and it's designed specifically to have an encryption USB device that you can store your private key on. What that means is, whenever you want to make a transaction on the blockchain, on Bitcoin or Ethereum, you plug in that USB device, you make the transaction, and you release that USB device. That way your session ID, when you made the transaction, is encrypted, and it's safe and secure for you not to be hacked, for your private key not to be hacked. Again, remember we said if your private key is hacked or stolen, the hacker can take access of your account or on your wallet address on that blockchain. So some companies now are starting out with this, what is called cold storage, and for you to be able to store your private keys in separate offline storage. Yes.
Regarding our use case on the watch, we generated the hash key, but how it is physically embedded inside the watch?
It's obviously you would be storing a representation of that asset in the real world. So it could be a universally unique ID. So it's a hash done at the factory that's embedded inside the watch. There are a lot of manufacturers now looking at, embedding things like RFID chips within their products themselves at a micro scale that can be read with unique IDs. But the point is, it's not so much that you need to have anything more than a serial number of the watch. Because with this very tiny example, it's just showing that provenance of the watch, where it's been, which dealer has it, what happened to it when it leaves the factory. So that trail of logistical nightmare that can happen to manufacturers and suppliers and retailers can be tracked. So keep things simple. Use the serial number. That's your data payload. Don't overcomplicate it. Don't overthink it. And try it out. POC it. If it works, it works. If you think you need to reiterate and make it better, do that.
We have 5 more minutes. Probably just, yeah. One more question in the back, please.
Who has used it for major fundraising other than the initial public offering or initial coin offering? Any, for example, startup or companies have raised money through cryptocurrencies, and how big?
You mean using ICOs, fundraising using ICOs, initial coin offerings?
Other than ICO or IPO, other than the coin themselves.
Okay. I'm not aware of any companies that used different kind of funding. I don't know if Khalid, you're aware.
Sorry?
Different funding mechanisms for companies? Or?
I mean, any company been successfully raising money, okay, for their project, for their ideas, other than the coins themselves, okay, raising money for the coins themselves. So is there any money transactions being invested other than in coins themselves?
Yeah, I think that goes back to the concept of crowdfunding. So there are a lot of platforms now. Now Bahrain has issued regulations on this. You've got both equity and debt crowdfunding, both on the conventional and Sharia compliance side. So pretty much the idea is the following. If you have a project or a company or a startup, you want to raise funding, traditionally what has happened was you go to your friends, family, some people jokingly say fools, to raise money. Alternatively, you could look at angel funds or venture capital firms to actually put funding. But now, completely in the absence of getting funding from, let's call it, these different stakeholders, you could go to a crowdfunding platform where obviously they'd have to authenticate either your company or the project, and then you raise money from the public. And that's been an absolutely massive success globally. And there are a lot of examples of companies that have pretty much hit a brick wall. They were told you're not fundable, you can't get money, went on crowdfunding and raised millions. And so crowdfunding even came before the whole ICO phase, let's call it, / craze. So there are, I think that's a very a good one to look at, actually. And within the region, obviously, there are a few players. Bahrain is yet to have one licensed crowdfunding player. There are discussions for one, but you find some regional ones, and you find a lot of them in either the UK or the United States. So check out crowdfunding. That's, I think, an alternative one for you.
I'm aware of that, but most that I've seen is a couple of millions or relatively small amounts. But nothing big, nothing like above, at least I've not seen anything above, like say 50 million or 100 million or something like that.
No, I think if you're looking at such big tickets, I mean, there are a few examples of companies that have raised tens of millions in an ICO literally in a minute. I think if you're looking at tickets that big, you need to be looking at a Series B or C from a venture capital firm. I think it would be very difficult to raise 50 million on a crowdfunding, or maybe in an ICO in the future. That is your best bet. Or obviously getting a direct investment from an investment bank or an asset house.
I think we're running out of time, so we have to close it there. I want to thank you guys for coming. We appreciate your support, and we really are, I mean, I'm very impressed by the crowd. This is the third blockchain event that I do. The first one I did was back in CH9 in October, and I'm very impressed with the turnout and the people who are interested in this technology and to be able to utilize it in your professional lives, whether you're a startup, whether you are a student, a developer, or whether you are an existing business or an SME, there are opportunities for you to explore this technology that can add value to yourself. Education is key. You can actually get some help through Microsoft's team here, through Gamal Magdi, Khalid Saad with the team from Bahrain Fintech Bay, who are very, very helpful, with EDB as well. The ecosystem is improving and supporting and encouraging people to come up with unique ideas in fintech, and the opportunity is there. So you're only limited by your imagination and your own ideas. So we highly encourage people to take a look, and hopefully we can do more of these sessions with Tamkeen going forward. And of course, millions million thanks to Tamkeen for making this possible. Without them, we would not have been able to do this. And special thanks to Emel and the team and the marketing team at Tamkeen. And I'm very, very grateful for the panel. It was very difficult to get these people here, and I was able to get them with the help of Tamkeen, so many thanks for that, Mr. Khalid Saad and Gamal Magdi and Mr. Hisham Khalifa. So we look forward to seeing more of these sessions in the future. Thank you, guys.
Thank you all for being here. Thank you, the great panel. Honestly, good knowledge to share. Because as I said, it's a very new topic, hot topic in the market. So it's good for you to exchange this knowledge with each other. Just to highlight again one more point with the mentorship program. As I said, I'm sure there's a lot of hidden treasure here in this session. So please, I advise you, all of you, to go through our website and to know more about the mentorship program. So as I said, mentorship program is where we link experts and mentors in the market. To link experts and startups in the market, who has been in the market maybe for 10, 15 years, and to want to share their knowledge with the new startups, scale-ups companies. So Tamkeen, what we do, we facilitate this relationship. We match them together for a full year relationship. So please, I advise everyone to check our website, because the deadline will be on the 19th of Feb. So any startup here, maybe mentors from the panel as well, to share their knowledge and help help the community to raise awareness and to build as well good knowledge with each other. Thank you.